the economy is not responding to the Fed's tightening. And so they've got a lot more work to do.
The signals that we would expect to see after this much of tightening from the Fed, they're just not there right now.
You could get to a terminal rate that's even closer to 6% if inflation does not abate.
The Fed is setting itself up to reverse some of this policy tightening.
We haven't seen the Fed raise rates so rapidly before. We haven't had coronavirus economy, and we haven't had inflation like this for 40 years.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio.
Central.
Alongside Tom Keene
What's going
and Lisa
on
Abramowicz, I'm Jonathan Ferro. Amazing that Election Central is actually here in New York over the weekend, Tom. I actually think that speaks volumes. The fact that we've got the president campaigning in New York,
yes,
say that he won by more than 20 points in 2020.
It's just absolutely fascinating to see not only President Biden, but President Trump out there with President Obama as well. And all of the tensions of this election are what we cover every day. And I'm going to go right to Joe Biden's worst nightmare. Do you see $100 Brent crude in the vicinity of tomorrow or Wednesday? We're not there yet.
Did he say no more drilling yesterday evening?
I missed that.
Is that what he said? No more drilling, no more drilling. So on the one hand, he wants to tell progressives no more drilling. And on the other hand, he also wants to tell them the oil and gas prices are where they are because the oil companies won't drill. Can you make that happen for me? Just help me understand.
There have been story after story about how Joe Biden's gaffes have really directed where he is and the spats that he inadvertently created with, for example, Joe Manchin about coal production. I mean, there's so many different aspects of this because it is a conflicted moment at a time when natural gas and crude products are also very much the focus despite the goal for longer-term neutrality.
You know what they're barely talking about this week?
What?
COP in Egypt. Isn't that a change from 12 months ago? They don't want to talk about that on the campaign trail this week, do they?
It's messy. Right now, how do you connect the idea of needing fossil fuels now with the idea of removing some of the fossil fuel emissions later on? It is impossible to square that with any kind of blunt message. And right now, again, we know nuance doesn't sell.
Futures right now, TK, up about 0.5%. Big rally to close out the week last week off the back of payrolls, but still a weekly loss. Can the bear market rally continue? Mike Wilson of Morgan Stanley's got a ton to say about that, Tom, and I'll catch up with him a little bit later.
We got to go right to CPI here. And the question I have off of Michael Ferroli at JP Morgan, are we looking at rents sticky? Are we looking at a reaffirmation of oil up? Again, I'm on the Brent $100 watch. I mean, that's not rent, but that's a gallon of gas.
If I had to put you on the spot, do you want the results from the election or CPI up front? If I could give it you right now, what would you take?
I would take the CPI statistic up front, but it's going to be an eventful election. And based on the punditry I see, and many of these good guests will join us in Washington tomorrow and Wednesday morning as well. And John, to me, the basic idea is the how muchedness of this.
How muchedness.
How muchedness.
How muchedness.
That's 4 years international relations at University of Mosawa. Okay, the how muchedness of
it. Are you still upset by the game over the weekend?
Upset. I'm not upset. In hockey, folks, there's people that go directly to the net. I was not one of those. They have a gift to go. His first goal was textbook.
He's a dream,
what
isn't
a
he?
Beast he is.
He's just an awesome football player. Bramo, save Keene. He's very upset about the sports results.
Give us the how
weekend.
muchedness of your brief.
Before we get into the how muchedness, I want to make a comment about Mike Wilson and tie it to the election. That we're actually seeing, because of the CPI, because of inflation, because of where yields are, the idea of less fiscal spending being positive for stocks. Just let that set in, right? People are expecting a rally because of the prospect of less fiscal spending and perhaps more gridlock. At 9 a.m., we'll get the European view of this exact issue. How do you spend into an inflationary outlook? EU finance ministers are meeting in Brussels to talk about the energy crisis and to talk about a deteriorating economy and what they can do or not to support that. This, as CPI over in the Eurozone climbs 10.7%. We're going to get further reads around the country, around the world later this week in terms of CPI, and perhaps that will shape this entire debate in terms of how far these central banks have to go and how little fiscal spending can really be put into place. Today we have a slew of Fed speak. Boston Fed President Susan Collins and Cleveland Fed President Loretta Mester are going to join each other at 3:40 p.m. at a panel discussion discussion, a moderated discussion. And Richmond Fed President is playing the 6 at 6 p.m. Tom Barkin. What can they say at a time where they're not making any progress? Bill Dudley was speaking at a panel overnight in Singapore, and he was talking about how they really haven't made any progress whatsoever on the employment front. How do they talk about that when it's a really uneven transmission mechanism? And aftermarket, when we're talking about earnings, we get Lyft earnings, the latest of a slew of tech companies that have announced layoffs. And I really am curious about how this plays out, whether this is just a tech story, as we were talking about last week, or whether this is a broader kind of cutback. We've got Lyft cutting jobs, Meta overnight saying that they're going to cut thousands of jobs. John, is this just a specific area that really built up over the pandemic, having to now reset expectations?
Lisa, thank you. That's where the excess was, and that's where we need to unwind some of the excess, apparently. Apple down about 0.8% in the pre-market, Tom. So Apple came out yesterday. The lockdowns in China continue. Ultimately, that's going to affect supply. We came out with an additional story here at Bloomberg as well, saying that these cuts aren't just about available production. This is about demand too. That's the interesting element that we've put out there in the last 12 hours.
What I've noticed, in full disclosure, folks, I bought 2 of these beasts here in the last 5-10 days, and one of them on a huge wait list, I might point out. What I would point out, John, is a polarity between their fancy, expensive phones, the one Mark Gurman has,
sure,
and the other ones, the cheaper phones, aren't moving.
What did you buy? The more expensive one?
I bought a purple, fancy, more expensive one, and I got the one just, Vet Bill got the Pro Max, Kennel Fee got the Pro.
This is ridiculous.
And I full disclosure, I was thunderstruck at the quality of the photos. I had no idea.
Is the camera almost as good as the Samsung camera now?
I don't know. I have no idea.
I'm told by Android users that the Samsung camera is really, really good.
Are you just trying to trigger people this morning?
Trigger them? What? I've got an Apple.
No, it's
just a
no.
question.
I think John's point is germane. This ecosystem they have is built up. As Dan Ives, I believe we're referencing Dan Ives here this morning to get his opinion on this. But the bottom line is you got to wait weeks, months to get the fancy iPhone.
Dan Ives, 8:15 Eastern Time. Looking forward to that. Ben Laidler joins us now, global market strategist at eToro. Ben, we're trying to work out what the next catalyst is for this equity market. Let's call it a bear market rally, Ben. I don't know if you agree with that terminology, but where's the next catalyst come from?
Yeah, by my count, this is our sort of 5th bear market rally. You can see up to sort of 10 before we have that sort of finally have that breakout to the sort of next bull market. What kicks off the next bull market? I think fundamentally it's the Fed starting to cut interest rates. We're obviously, quite a long way from that right now. But I think this process has sort of begun, right? Earnings have been less bad. They continue to hang on in there. The necessary first step to the Fed cutting earnings is stopping the hike earnings. And we're getting closer to that right now. Valuations below average, sentiment's very depressed. We're moving into the best seasonality of the year. And, there's a bunch of big wild cards out there where I think the risk is on the upside. And, China's the obvious one. You put all that together, and I think there's absolutely enough to say that we're sort of building a bottom here. And this is a very investable market. And the next big move is up. I just think we're probably going to bounce around for a little bit before we have that sort of definitive, sustainable, beginning of the next bull market.
Well, Ben, there's certain gamma out there. There's certain volatility. There's certain acceleration. But looking into 2023, using the Greek letters alpha and beta, is this going to be an alpha ad market? Is this going to be an individual stock picking market? Or is it an index fund market?
I think it's alpha for the first half and beta for the second half. I think, growth is absolutely going to slow. We're going to be talking more about recession. Earnings are going to come down. But the closer we get to the top of the Fed cycle, the more we start looking forward to rates being cut. I think that takes pressure off valuations. So I think it's very much going to be the opposite of this year, right, where earnings held up and valuations were absolutely crushed. I think you're going to see some valuation relief. I think earnings are going to sort of stay under some pressure. I think we're going to see the benefits of diversification a lot more. We're not going to see bonds and equities, I think, both get crushed together, which is the sort of historical anomaly we've seen this year. So I think it's all change again, right? This year was very different to last year, and next year I think is going to be very different again. So I think investors going to have to stay on their feet. I think it's all about stock picking in the first half and maybe more about beta in the second half.
But just to wrap it up, are you basically saying that in the next year or so we go back to what we knew over the past decade or so, a low inflation, rate cutting environment that's a tailwind for all assets?
Yes, with a sort of ish. I mean, I think the last decade is extreme, both in terms of the level of growth, also in the level of inflation, the level of interest rate. I think they're all going to ease in that direction, but I don't think we're potentially ever going back to the degrees we saw for all those things over the last sort of decade or so. So I think that's going to be I think growth is going to get a bid, tech's going to get a bid, but I think certainly for the first half, it remains very much about sort of value and defensive assets, certainly for the first half, a bit more risk in the second half.
Hey, Ben, wonderful to hear from you, sir. Ben Lader there of eToro. TK margins under pressure. You see that commentary from BlackRock. You see it from Goldman. You've said it a million times. It's your phrase. Companies adapt. Let's talk about how they're adapting. They're cutting.
Cutting. That's the first path always, and I think we're going to see much more here. We're advantaged by Bloomberg Intelligence. Gina Martin Adams is heated. You're going to see it at the operating income line. Every CFO is going to lean over to the CEO and say, here's the shortest path to stability.
You know what's amazing as you look across the tech sector? I actually think it's the chip industry. Think about how quickly that story's moved in 12, 18 months, Brownlow.
Yes.
It's flipped from we can't get enough of the stuff to we need to start cutting. That's quite a change. And I think for a lot of people looking in this market and they look at the economy, they think about how much more quickly, perhaps, can inflation come down? I'd look at that industry and say things can flip pretty quickly.
And it's not just chips, right? I mean, it's also the retail sector more broadly when they produced a lot of clothes that they didn't perhaps need now, but they needed about a year ago. It's the same kind of story with cutting some of the costs. At what point, though, do you still see services continue to accelerate, people still paying more for that, in this sort of bifurcated market where you see pockets of inflation still accelerating is really what's got people concerned?
7 handle is what we're looking for from CPI on November 10th. You seen the numbers?
Yeah, but honestly, is that a good thing? I mean, if we end the year at 7.8%, is that really going to be such a victory considering where we thought we would be by a year?
I wrote a banner and I didn't use it where 7.9% is way different than 8.1%. That's about all I can give you on that. Sure. I thought Ferroli was brilliant this weekend at JP Morgan.
Always is.
They're looking at like, you know what? Inflation's coming down. You know what? Don't tell rents.
Michael Schau.
That's their sum.
We're going to catch up with the man from Marketfield Asset Management in the 7 o'clock hour, about 50 minutes from now. Looking forward to that. Equity futures this morning. Big week ahead. CPI and midterms in America. Futures higher by 0.6%. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The U.S. and Russia reportedly have held private talks on ways to avoid escalating the war in Ukraine. According to the Wall Street Journal, a peace settlement wasn't a goal of the discussions. The Biden administration was said to have warned the Kremlin against using nuclear weapons. In Egypt, United Nations climate change talks got underway with a deal on discussing reparations. The idea is that rich nations can help pay for damages caused by global warming elsewhere. Industrialized nations have repeatedly blocked attempts to add that to the agenda. In China, exports and imports unexpectedly fell for the first time in more than 2 years. Overseas, consumers bought less, while demand in China was hurt by COVID-0 controls and a housing slump. Resilient exports had been a major support to China's recovery in the past 2 years. Twitter is asking dozens of employees it laid off last week to please come back. Elon Musk cut close to 3,700 employees last week to slash costs. Bloomberg's learned that some were laid off by mistake, and others were let go before management realized they may be needed to build new features that Musk wants. And Bloomberg has learned that Apple expects to make at least 3 million fewer iPhone 14 handsets than originally planned for this year. Now, the cutback is due primarily to softer demand for the iPhone 14 and 14 Plus. Apple and its suppliers now aim to make 87 million of the devices or fewer. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Democracy is literally on the ballot. I've been making this case since I ran. You know, there are more than 300 Republican candidates for state, local, and federal office who are election deniers. These deniers not only trying to deny your right to vote, they're trying to deny your right to have your vote counted.
The President of the United States, a busy weekend campaigning for him. Live from New York City this morning. Good morning to you all. Here's the price action to kick off a busy trading week. Equity futures look like this, up 0.5%, adding to the gains of Friday. Yields lower, just a basis point on a 10-year, 414.40. In the FX market, Euro sterling, a bit of strength, just south of parity, 99.81, with positive 0.2%. And crude going nowhere, but Tom, back in the 90s.
Well,
92.64
yeah,
on
Brent
WTI.
crude $6 up, $98.67. It's not through the highs of Friday, but it's there. One event, I think, gets you to $100 a barrel, which for President Biden is $4 a gallon and up gas. And out in California, of course, a lot more than that. We will go to the person we will lean on here tomorrow in Washington and Wednesday morning as we pick up the debris, and that is Anne-Marie Horton, our Bloomberg Washington correspondent, steeled to join the surveillance entourage tomorrow morning. I look, Anne-Marie, at my reading over the weekend, and the thundering silence I noted was not distrust in the polls, but just what is the value of the polls? You talked to all the experts, both sides of the aisle. Do the polls speak the truth?
Well, they're a bit confusing, right? Because when you look at the polls in terms of issues, top of the issue is inflation and the economy, and that's what people are going out to vote on. And at the same time, when you ask them, who do you trust, the economy and things like crime more in the hands of, it's Republicans. But then over the weekend, there's an ABC Washington Post poll that says from people's districts, it's pretty much neck and neck for Republicans and Democrats who they're going to vote for. And then also an NBC poll says that Democrats are now catching up to Republicans in terms of enthusiasm of voters wanting to go out. But if voters are focusing on the economy and inflation, other polls show they should be leaning Republican. So they are quite confusing at the moment. I think by and large, everyone is expecting, obviously, a red either ripple, wave, or tsunami for the House. And it's really just going to come down to the Senate to see how this shakes up for next year.
How do we determine turnout election day, or do we just have to wait till Wednesday morning?
Well, we already know what some of the turnout is. So more than 40 million people have already voted. In Georgia, you're seeing record early voter turnout. I was looking at data this morning from a Democratic data analytic company looking at Pennsylvania already beat the last midterms 2018 for ages 18 to 29. This is a key group the Democrats are clearly trying to harness to make sure these individuals, which a lot of them are young, lightly lean, progressive. Look at the president last night in Sarah Lawrence College in Bronxville, New York. But in Pennsylvania, these individuals are already going out and voting.
When you talk about New York, and we were talking about that earlier, John brought up what does it say when Joe Biden is campaigning in New York, when you do have such an overwhelming Democratic feel in this state? How much is this a single issue election? In New York, perhaps crime. In other areas, perhaps economy. And in other areas, I'm thinking Georgia and Missouri, perhaps abortion. How much is it sort of select numbers of individual issues that are driving people to the polls?
Really, you have to look at locally what is driving people out. You know, all politics is local, as they say. In New York, it has been crime, and it's not just President Biden. You had the former President Bill Clinton. You had Kamala Harris, the vice president, which really hasn't done a lot of campaigning with individuals. Also out on the stage with Governor Hochul. I think this speaks volumes that the Sunday evening before the midterm elections, the President of the United States is in Bronxville. He's in Bronxville, New York, trying to make sure they can hold on to the governorship in New York. And this obviously is not going to change the calculus of this administration in Washington, D.C. and Congress. But what kind of tone does this set for the Democratic Party going into 2024? I'm looking also at the mayor race in Los Angeles and the fact that the Republican, this real estate developer, Mr. Caruso, actually is gaining a little bit of advantage. What kind of tone is that setting? And I think that's what people are most interested in at the moment.
It is kind of amazing, Anne-Marie, that we're actually not talking about the midterms at all. We're talking about the warm-up to whatever happens in 2024. Former President Trump saying that he's going to probably announce in the next week or so after the election. People wondering, what will Joe Biden do? What is your sense on that?
Yeah, and former President Donald Trump actually said at a rally this weekend, stay tuned for his rally this evening in Ohio. So maybe he'll even hint more at his 2024 bid. Right now with the Biden camp, they say they are running. Obviously, this is something that is a 2-year-long race. The president, there's lots of questions about whether or not he will actually end up doing the next 4 years, but many maintain that if President Biden will run if the former President Trump ends up being the nominee, but a lot can happen in the next 2 years. I mean, look at the Political report this morning. Look at some of the big Wall Street money is going, and that's going to Ron DeSantis. You had Ken Griffin pouring money into that campaign, and he said he would if he runs for 2024.
AMH, thank you. Anne-Marie down in D.C. Looking forward to the coverage
Nice report,
over the next couple of days. Lisa, for a lot of people, it comes down to whether we have an outcome that loosens or tightens the purse strings down in Washington. And what's interesting about that is that in the near term, if you get one that tightens the purse strings, I think people see that as somewhat bullish. Is that going to be bearish in 12 months from now? If inflation is lower and the economy's rolling over and the fiscal support can't be provided? I do wonder. That's a question I'm asking myself this morning.
I mean, it also gives you a sense of just how much full circle we've come, right? That less fiscal support is bullish for markets, even though in the past, more fiscal support was bullish for markets. This question of, is this just purely an inflation game to get inflation under control, bond yields under control, and that's going to really dictate gains? And to your point, for how long? And when does the game plan change?
Did you want the breaking news of about 2 minutes ago?
I can't.
Are you on top of
I'm
this?
talking to travel right now.
Are you booking flights?
You guys
The Champions
are too
League
much.
draw is out.
Oh, this is fun,
So
John.
this is the knockout stages in the middle of February because the World Cup is disrupting the whole thing. AC Milan, my club, against Tom's Tots in the middle of February. Are we going to go to this? The draw's just
San Siro,
out.
is it? In the
The
first
San
time
Siro.
in 12 years. First time they've played in 12 years.
It's been a while.
Explain to our American audience, this is not Premier League. This is the all-European
The best of the
league.
best in Europe, yeah.
And the answer is AC Milan's really on their game this year.
They're better than they were maybe 5 years ago.
Okay.
This will be interesting.
This is going to be in Milan.
Are we going to go? Yeah, the first leg's in Milan, and then
So-
the second leg is in London.
So can you walk? They've got an intern over here I've got to talk to. Can you go be sure we can get the American Airlines to Milan?
Honestly.
If we can't, we'll
You're gonna
go
come
through
to this?
London if we
Sure.
have to.
He's going to be eating the pie with a fork and knife.
I
You'll
don't
be
think
seeing-
they're not doing pies in Milan.
Not in Milan.
Okay.
Okay. No, I know. Maybe not in Milan. When you get to London, what do they do in Milan?
Campari?
Can have a Campari.
Have a Campari.
We'll make this happen. Live from New York. This is Bloomberg. Let's get the trading week started. Equity futures up by 0.6% on the S&P. On the Nasdaq, up by 0.6%. Also, the small caps, the Russell, positive by 0.7%. The bond market shaping up as follows. The range on a 2-year last week, the high was close to 480. The low was close to 440. That's a 40 basis point range last week on a 2-year. Right now, somewhere in between 468.18 on a 2-year. Yields higher on the session by a couple of basis points. In the FX market, take a quick look at the euro. In foreign exchange, even with that move higher in the week in a 2-year, the DXY, the dollar index, didn't give me much last week at all, Tom. Euro dollar back to 99.84.
I think it's an important insight, and what's amazing there is how yen has strengthened 146.64, and I do agree with the U.S. yield shift up. We didn't see it in further dollar strength.
A lot of weakness out on Friday, Tom, post-payrolls. I think we're all still trying to work out what that post-payrolls move, Tom, was all about.
It is a time of change and all as we readjust to the end of the year and maybe readjust after the election. Joining us now, someone with terrific perspective on this, Alan Ruskin, Chief International Strategist at Deutsche Bank, is well. Alan, I want to go to the path from ultra-accommodative Stanley Fischer to accommodative to an unmeasurable neutrality and to what Dominic Constam over at Mizuho calls super restrictive, which is basically disinflation, even with oil, even with rents. How close are we to restrictive? How close are we to super restrictive?
Great question, Tom, because I think you can't just look at this in terms of monetary policy. You have to look at it in terms of fiscal policy as well. And I think the most underrated element in terms of the policy stance is that fiscal policy from 2021 was really the most stimulus we've ever had by quantums. Yeah, I think had a 10% of GDP stimulus at that point for over those 2 years, about 5 times what a large stimulus is. That's still reverberating. That's still showing up in excess savings. That's still buffering the consumer. And to me, that is creating the underlying resilience. That means that interest rates can be much higher than they would otherwise be.
Right.
And that interest rates look like they're much tighter than they are.
An arch theme of your colleague David Folkert's Landau has been there will be fiscal stimulus, clearly in Europe, to rebuild Europe after an horrific war as well. Do you see fiscal leveling, fiscal stimulus, or maybe even some form of drop down in fiscal spending in America?
Look, I think a lot is going to hinge on Tuesday and the events thereof. I think the anticipation is that fiscal policy is going to be a lot tighter going forward. I think the question there again is, what are we going to see in terms of front loading from the lame duck session in terms of, the debt ceiling, how much constraint is that going to impose? But I think the anticipation will be that we will see tightening. But I again want to emphasize the fact that the lagged fiscal stimulus from 2020 and 2021 is still going to act as a buffer for 2023 and 2024. So it's still going to be substantive. And I'm not that worried about the tightening on the fiscal side.
Okay, but there's a very strange confluence of bad news is good news for markets right now. And we can put fiscal spending in there. It's good when we get bad data because that means yields will go down. It's good when we get less fiscal spending because it means bond yields will go down and perhaps they'll cap inflation. At what point does that run out and people start to think, okay, wait a second, this isn't going to support the economy, and that is negative broadly for the dollar and for risk assets?
Yeah, Lisa, I think if you look at the past patterns whereby we've had a Democrat president with a divided Congress, you've seen, as you might expect, that fiscal deficits tend to come down. You see bond yields well supported, but you also see equities tend to underperform, and you see the underlying economy, the GDP numbers tend to be weaker. So I think you asked the right question there, that it does tend to add to underlying weakness, and that good news for the bond market is only going to filter through to some extent as far as the economy is concerned. I don't think it's going to be sufficient, for example, to stop a recession, say, by the time end of 2023 into 2024.
We had Ben Laidler on earlier in the show, earlier in this hour, and he was saying that he thinks that there's going to be a very big move up in risk assets because that there will be cutting of interest rates by the Federal Reserve. And we'll go back, not to the same extent, but to a similar playbook as the one that we've come accustomed to. Do you think that that is likely? Is that something that people can count on in the next 12 months or perhaps even 18 months, even if it doesn't seem like it's on the horizon now?
I think that's a very optimistic view. I think, we're trying to establish all the things that Powell highlighted, which was where's the peak and what is the shape of the rate cycle at the peak. And increasingly that peak just seems to drift up. We're now at a 5% handle. It's possible, and I think the skew is still to the top side of that. We're thinking in terms of the shape, and people felt the higher we got, the quicker rates would actually come down. In fact, now increasingly there's a feeling that rates won't come down quickly, that it's more like an inverted L at the top of the cycle. So to me, none of that is that optimistic from necessarily from a growth cycle standpoint.
Alan, if we dash to $100 Brent again, is the $100 a barrel Brent, if we see it now at $98, is it the same as $100 the last time around?
I think you've always got to, just assess what the overall backdrop, macro backdrop is. I mean, I think it would be upsetting from a sort of a stagflation standpoint if we start to see oil prices move in the so-called sort of wrong direction from a stagflation standpoint. I think, falling on a weakening economy, one would argue that perhaps it'd have even more negative effect than it would have had, in prior, last few quarters.
Alan, a general question here. Let's call it Econ 101 this morning. I believe there are 14 core CPI measurements in each country. Is there a value to looking at headline inflation now, or do each of us have to find a core series we're comfortable with?
But I think core was seen as helpful in terms of telling you what the underlying picture was, where the natural gravitation would be over, say, a 12-month period when food and energy prices, erratic food and energy prices, work their way out. But I think if you're asking questions about, what is inflation doing for the average man in the street, then skip the core. I mean, you've really got to focus on the total inflation, and it would be a travesty really to start removing food and energy from those kind of measures. But I think core for the economists trying to look, say, 12 months out is still reasonable, and you've got to search country by country, I'm afraid, Tom.
When you look country to country, I just want to wrap it up with this question about Europe. And we've been talking a lot about the U.S. and the fiscal spending in the U.S. and how we're going to see the dollar progress. But at what point does Europe become attractive again, considering how much it sold off, but also considering that it faces a much bleaker picture in many ways than the United States?
Yeah, I mean, obviously a lot turns on the politics. So you had somewhat optimistic mentions of the US touching base with the Russians, which is, I think going to egg people to think in terms of some sort of Ukraine peace deal eventually. That's obviously an optimistic view of things. So that's going to be crucial, I think, in terms of, how you think about Europe going forward. That being said, I think there is some built-in resilience that we're starting to see from the economies. You are seeing an ability to navigate some of the energy shocks. So I don't think it's all pessimism really in a way, but I think you're still going to have to just wait for that political signal before it's a real buying opportunity.
Alan, thank you as always, buddy. Appreciate your time. Alan Ruskin there of Deutsche Bank. On a week ahead, on the year ahead, the missing part of this conversation is China and China reopening. We had a week of rumours last week. We had health officials out of the country reaffirming their commitment to COVID zero. Bit of scenario analysis came from Goldman over the weekend as well. Tom, if you drop COVID zero and deliver a full reopening, they're looking for a move of 20% on Chinese equities. 20%.
Yeah, I guess that doesn't surprise me in the sense that I look at the GDP statistic, which is the gloom of under 3%, 3, 4, 5, dare I say 6, it's nonlinear, and every single point of GDP they get up, that's what makes that equity pop as well.
The commodity market pop as well, I think is what we're all looking for. And Bramo, you and I have had the conversation. What are you looking for?
I'm looking for flights to Milan.
Okay. You keep looking and you let me know how much they cost.
I'll let you go. Well, no, well, who cares? Redo's picking
you at the front of the plane and me at the back, as always.
Yeah, thank you.
No doubt about it. Elisa, we're trying to work out whether it is bullish. A China reopening is bullish or not, based on just a simple equation. If it reopens the supply side of things, great. But if it injects massive demand back into the economy at a time where things are still somewhat constricted, particularly when it comes to energy, where does that leave us?
Well, and especially the Apple story kind of highlights this.
In a big way.
There's not really certainty about why they are reducing production. They are saying it is because of some of the COVID restrictions. They are saying in a statement that they are concerned and feeling that there are some sort of fissures just in terms of their employment picture. Other people reporting, including Bloomberg, that the demand side is cooling. So at what point is the supply side response going to come too late to be disinflationary when you already have demand cooling off that's negative for the global economy?
I think we're all trying to work that out. The other issue as well, and I'm pleased we're talking about this ahead of the midterms, there is this kind of universal consensus view in markets right now that if we get a divided government, it's good because it restricts our ability to deliver a big fiscal package to help an economy that's in a downturn. Now, maybe that's true in the short term. I just don't know about the longer term. If you end up in a situation where we don't have that counter-cyclical fiscal buffer in a time when the economy's rolling over and the Fed's still committed to keeping interest rates at, say, 4%, 5%, who knows what, next year, will we still view it in quite the same way?
Alan Ruskin pointing to the even greater issue that the lag effects are great for fiscal stimulus as well. And we will still see the boost from the fiscal stimulus of the past few years for 2023, 2024. It's after that that the real entrenched pain happens and that you won't be having that fiscal support.
Back to the important question. Did you get prices?
I'm working on it. The seats are going like hotcakes. Olivier Giroud is really something.
Giroud?
Is he too old?
So you know what the rumour was over the weekend? So he got a yellow card and he scored late in the game and he took his shirt off. So when you take your jersey off, Tom, you get another yellow card.
I did that last week.
So he got himself sent off, and people believe he deliberately got himself sent off so he could be fresh for the World Cup. Do you like that?
Okay.
Genius move.
Is that a genius move?
Genius
That's
move.
fun, though. I mean, he's like the real deal. He's like out of simulcast.
Just trying to distract myself from what you said moments ago.
Yeah,
From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Ukraine's President Volodymyr Zelensky wants Iran to be punished for helping Russia. Zelensky said if it wasn't for Iran supplying weapons to Russia, quote, we would be closer to peace now. Both Ukraine and the U.S. say that Russia is using Iranian drones in the war. The head of the International Monetary Fund says global inflation may be close to its high point. Kristalina Georgieva spoke to Bloomberg at the UN Climate Exchange Summit in Egypt.
It is very possible that we are peaking. We now see central banks very united on fighting inflation is top priority, and rightly so. If we don't succeed, it would be anchor, and then the foundation for growth, which is price stability, is dented.
Georgieva also said it would be a struggle to bring consumer price gains down to a more palatable pace. Philip Morris International will go ahead with the $16 billion takeover of nicotine pouch maker Swedish Match. The maker of Marlboro's received support from enough shareholders, including the company's largest one, Elliott Management. Swedish Match and its U.S. distribution network would give Philip Morris a foothold in the biggest market for alternative smoking products. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
This is going to be a wake-up call to President Biden, and I hope he answers it, because what's happened over the last 2 years has really caused a lot of problems in America. I hope that President Biden sees what Americans are going to say to him on Tuesday, which is we're not happy, and we need a different agenda.
Governor Glenn Youngkin there of Virginia speaking on ABC over the weekend. Live from New York City this morning. Good morning. Futures up 0.6% on the S&P 500 after a week of losses. Down on the week on the S&P last week by a little more than 3%. Yields higher through last week, lower this morning, down 3 basis points on a 10-year to 4.1314. In the FX market, euro dollar 99.81, positive 0.2%. Question many people asking over the weekend, Tom, is how long we'll have to wait to get all the results, particularly if we get a runoff in Georgia.
Well, this may extend our trip down to Washington. We'll be there Tuesday and Wednesday, and of course we will be there through the month if we have many, many different hung races.
Which
it's
is an extra 4 weeks.
Yeah, it's not just another 1 or 2 races, though,
Lisa's
John. It's like 5 or 6, 7 races.
Pretty much.
It depends how much Georgia's going to matter ultimately, but it looks like it's going to a runoff regardless.
Yeah, Axios out with a smart article today on gerrymandering. I love their phrase. They call it, I believe they call it dumbmandering, where some of it hasn't worked out. Right now, and this is a joy, we truly begin our coverage with Wendy Schiller, director of the Taubman Center for American Politics and Policy at Brown University, with Greg Valliere, just a foundation of what surveillance does on politics. Professor Schiller, I want you to address, as in your memo, the midterm messaging that has led us in the last 48 hours to indeterminate polling. Give us the messaging dynamic, red and blue, versus the polling shock that we're going nowhere in the last 2 days.
Well, what's interesting is sort of a very late shift by the Democrats. We've talked about this before, to the economy, and also attacking Republicans on Social Security and Medicare. The problem with that strategy of the Democrats is many people who are over the age of 65 already voted. That's the biggest bulk of people who vote by mail. And also people between the ages of 41 to 65. A lot of that early voting is coming from them. They care about the economy. It's just a little bit too late, I think. And, they misplayed the abortion issue by overemphasizing it nationally and not being strategic about that. They did some redistricting decisions that we could talk about. We don't have time. In 2020, we have that case in Rhode Island where they over-districted, in other words, put too many Democrats in one district and left the other district vulnerable. So now we've got a potential for a Republican to be elected in Rhode Island for the Congress. That hasn't happened in a long time. So I think, on the other hand, the Democrats had a lot of losses in 2020 in the House. So, the damage actually might be mitigated. In other words, the Republicans can pick up a lot of seats and win control, but it won't necessarily look like 2011 or 1995.
Where are we on the tipping point where the mail-in voting, the pre-voting becomes more important than the Tuesday voting?
That's a really great question. Places like Pennsylvania, for example, we're all watching that state Senate race in particular. They start counting Tuesday morning. So you may not have that kind of blue wave, red wave kind of thing going on. It may take them a long time. There's about, I think, 550,000 or 600,000 early votes by mail, but they start counting at least on Tuesday. It's some other states like Ohio. They accept mail-in ballots for another 10 days. So, if it's really tight in some of these states, it could be a while before we know the answers. But midterm elections are about a referendum on the party in power in the White House. Most of the time, that party loses seats. When you have such division, you're going to switch control of the chambers a lot more frequently. 20, 30 years ago, we didn't have as much division. And so, it's harder to flip control. But it is typical for the party in the White House to lose seats in a midterm election.
Wendy, is this a referendum on this administration, or is it a larger referendum? There was a story in Axios basically talking about how leading Democratic voices are saying the party is seen as too extreme, and that this basically is a big clarion call for a rethink in some of the messaging more broadly. Do you agree that that is the conclusion if the Democrats do face some pretty severe losses this particular week?
Lisa, I think it's just so much more complicated than that. And I would be cautious of over-interpreting the results of this particular election. People are concerned about inflation. It's still hard to get a new car. There's ridiculous inflation markups on new cars, for example. I mean, people feel it. They feel it every day. This could just be a big example of bad campaigning by the Democratic Party in terms of messaging. They had tons of money. And did they not emphasize what they should have emphasized? Sort of average campaign 101. And in terms of democracy, if we have turnout, we already have more early voting than we had in 2018, by about 1 million votes already. And we don't even know the full extent of early voting. So if we have really big turnout and you say democracy is dying, that's a conflicting message again. So the Democrats have to be cautious. Everybody has to be cautious about interpreting the results of this particular election. But it is true that the Democrats did a lot, they say they did, for a lot of the people who are not voting for the Democratic Party in November. And where is that mismatch most acute? And how do they have to localize their messaging as they move forward?
Well, especially when it comes to crime. And I say this living in New York City and living in New York, and we have seen this become a huge campaign issue that actually makes this highly blue state suddenly on the ballot when it comes to the governor race. What's your interpretation of that? And I understand that there are single idiosyncratic messages, but is this just a messaging issue or is this a policy issue?
Well, I mean, in terms of crime, the irony for the Democrats or the frustration with the Democrats is that part of the violent nature of crime is that more people have guns. It's just easier to get a gun and many more people have guns. That's due to basically Republican/NRA opposition to gun safety legislation. But the Democrats have just lost that message entirely. And it's true. People want to be safe when they go into a supermarket or a movie theater or the subway. Wherever they are, they want to be safe. And it's been typical that the Republicans have taken advantage of that in electoral terms. And there is also sort of a racial coded message in criminal, sort of focusing on crime in some areas as well. So the pushback by the Democrats against that messaging hasn't been exactly the right mix of messaging about security versus being, cautious on using racist or stereotypical tropes on crime. So I think the Democrats have some work to do on messaging. They also have to figure out who's going to run their party. They have people who are, no offense, people in their 70s and 80s, all good, but they have a fairly old bench. And the Republicans have a fairly younger bench, with the exception of Donald Trump, who still has a lot of vitality. But nonetheless, you had the governor of Virginia, relatively young guy, probably has a future in national politics. The Democrats have figured out who is there, who are their spokespeople, and what age group are they picking from. And that's a big rethink for them, and they better do it fast.
Wendy, thank you. Wendy Schiller there of Brown University. I think you missed that at the end, Tom. Perhaps for the best. Wendy, thank you very much. We're talking about consequences. We're thinking about the fiscal policy consequences. Let's talk about foreign policy. The one area of agreement down in D.C., if you can pick one, China.
Absolutely.
A story just out from the Wall Street Journal that Xi Jinping, according to people familiar with preparations for a trip, is planning to visit Saudi Arabia before the end of the year. Tom, what do you make of that? Just out from the Wall Street Journal moments ago.
I think as an activist, not only the Chinese leader, but all leaders, Mr. Putin is a little distracted with the war, but it's not a United States in a vacuum. And often with our different definitions of isolationism, we want to work in a vacuum. We don't have that luxury.
You mentioned the war. Lisa, we got to think about where the support will be to support Ukraine.
Yeah.
particularly if you get a divided government in D.C.
You have an increasing push to remove some of the support because why are we helping when we need to have help at home given some of the price rises? And especially if you do see a softening economy, a complicated picture, especially China's heading to Saudi Arabia.
Yeah.
That is interesting.
Isn't
I wonder
it?
especially
Isn't it
how much is that ahead of opening up from COVID-0 and all sorts of things too.
I guess the rumour mill going, doesn't it?
Well,
hasn't travelled much at all over the last couple of years.
I know, and now suddenly where is he going? Fascinating.
Futures up 0.6% on the S&P. Live from New York. Big week ahead. Say that every Monday. Big week ahead.
It is.
This is Bloomberg.
The economy is not responding to the Fed's tightening. And so they've got a lot more work to do.
The signals that we would expect to see after this much of tightening from the Fed, they're just not there right now.
You could get to a terminal rate that's even closer to 6% if inflation does not abate.
The Fed is setting itself up to reverse some of this policy tightening.
We haven't seen the Fed raise rates so rapidly before. We haven't had coronavirus economy, and we haven't had inflation like this for 40 years.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Futures right now on the S&P positive 0.5%. TK later this week. America decides, and it's CPI just around the corner.
Yeah, America decides CPI, and I agree with you. It's equally as strong as this election that we're going to see in the next 2 days. And as you mentioned, John, we're going to have results coming out after Tuesday as well. The market today shows that indecision, if you will, of decision 2022 is it's a churn here. I'm watching oil more than anything.
Question of the week, and I asked it of you an hour ago. Bramo, it's your turn. If you could have the result of one thing right now, would it be the midterms or would it be inflation in America?
It would be inflation in America. It would be CPI for the next 2-3 months. It would be the outcome of the election for the next 2-3 years. And I think that that is the distinction because the near-term rally is really being driven by the CPI. The longer-term fiscal and just political backdrop will drive more long-term.
And from the previous hour, the distillate here is gridlock, less fiscal stimulus. I think that's sort of the summary.
Positive in the near term, and I think we're all asking the right question here. Is that positive in the longer term? If you can't deliver a counter-cyclical fiscal buffer when you need one, is that positive next year? Now, that's going to hinge on where inflation is and where bond yields are. And if inflation is rolling over and bond yields have reset lower, then maybe that's the kind of thing that you might want in that environment. But Lisa, that's a lot of questions that I haven't got a clue and I don't know the answers to.
Nobody has the answers to any of this stuff, which is the reason why you get a churn and people saying that it's a technical bear market rally that's going to have legs because why not? And people trying to come up with an explanation for this type of price action. Good luck. Have a good time. Because honestly, it's not particularly lucid in terms of the narrative that's consistent.
Thank you, Lisa.
Anytime.
Futures right now, up 0.5%. Let's whip through that price action. Bramo's going to run you through the day ahead and maybe even a week ahead. Yields look like this on a 10-year, down a couple of basis points to 413.56. Yields last week higher, much higher, particularly on a 2-year. Talked about the range on a 2-year, though. 40 basis point range on a 2-year, Tom. Last week, very close to 480 after Friday's payrolls and now back down to about 468.
Okay, back down, but I'm going to suggest all of the fixed income data we have is still elevated. It's come back a little bit from Wednesday, Thursday, Friday, but nevertheless hasn't given back all that much. I look at the real yield, same idea.
To Lisa's point, it all comes down to CPI a little bit later this week. Euro dollar going into it. Lisa, 99.80, positive 0.2%.
Yeah, and here's the issue, is that, yes, the U.S. is facing a pretty serious inflationary wave, but so is Europe, so is the rest of the world. And this really is the reason why it's so hard to game out what the implication will be in terms of a market narrative following a CPI report one way or another. 9 a.m., we have European finance ministers meeting in Brussels. This is really the front and center for what they're talking about, too, a 10.7% CPI rate for the Eurozone. Where is that headed? What can the ECB do? What can they do if the fiscal policy response is broken, essentially? You can't flood this market with money and solve the problem simply because money is the problem when it comes to how quickly inflation has been accelerating. Today, we get a host of Fed Speak. How do they really message on this? Boston Fed President Susan Collins and Cleveland Fed President Loretta Mester will have a discussion around 3:40 p.m. Richmond Fed President Tom Barkin is speaking at around 6 p.m. How do they talk about the conflicting dynamic between employment and fighting inflation. We've been talking about how this isn't really a big issue right now. When will it become an issue? At what point will inflation have slowed enough for them to start thinking about a dual mandate rather than a singular mandate? And aftermarket, the earnings is sort of trickling to a close with Lyft reporting earnings. Lyft last week talked about cutting jobs. We keep hearing this from the big tech companies. Meta saying that they're cutting thousands of jobs. Twitter, its own beast, obviously, because of the whole Elon Musk excitement over there, but cutting half the jobs. And then did you read about this, John, that he now is asking some people to come back because they were fired in error, and he needs to get some of them back in?
That's what happens when you make cuts quickly. You work out maybe you need to make some changes. Bramo, thank you. Messy, Tom. Seen a lot of cuts
messy
in tech.
is the exact right word here, and I don't have any punditry to add to it other than messy describes
I wonder how messy the Fed speak's going to be. I got this message on Twitter from a gentleman called Nick in the last hour or so. I fear the Fed speakers in the next week are going to sound as unified as members of the Kardashians choosing a restaurant. Tom, that could be messy too later this week. Fed speak in America. Do you know who the Kardashians are? You do know who the Kardashians are. Of course you do.
What's the allusion there to choosing a restaurant?
It's going to be difficult to choose a restaurant.
Really?
They're not going to be on the same page, Tom. They might be arguing.
This is getting painful.
There's multiple Kardashians? I thought there was just one.
Michael Shao joins us now, CEO of Market Field Asset Management. Michael, I'll skip that one.
Indeed, thank you.
We'll go straight to CPI and midterms.
Indeed, thank you.
You know what's coming, though? If you could have the result of one right now, would it be CPI or the midterms?
I think the midterms, and I was thinking back to 2010, where we had a 1-2 then as well, which was the midterms took place and QE2 took place within 24 hours. And the market rally we had was everybody sort of pointed to QE2 and said this is really what got the market going. But I always felt the midterms is what got the market going. I think markets prefer gridlock generally to one party having control of all the levels of power, particularly when that party has an aggressive agenda, whether it was Trump as he was in 2017-18 or the Biden administration today. And so, if the news of the midterms, really gave you a sense that the Democratic agenda was going to be put on hold for a couple of years, I get your point about no counter-cyclical fiscal policy, but I think the market would be happy to, put doubt to one side, doubt of new legislation.
Then if you've got a tripod here of the election, does it change Fed policy, which tempers the market towards a bull market because Fed policy adapts to a new world?
I mean, perhaps. I mean, there's no doubt the fiscal cliff did have an impact on Bernanke in 2013. I think right now in the current environment, the Fed is very sort of one-minded. It feels it needs to deal with inflation. I'm sure it understands that it made a big mistake 18 months, 2 years ago in not understanding where inflation was going. I don't think it affects policy in early 2023, but I think there would be a point that, yes, the Fed may be left as the only lever of loosening if we ever get to the point of the economic cycle that's required. It seems quite distant today.
So every week we say this is a big week, and every week feels like a big week. We get a data point. We get something that helps shape a narrative for us in terms of where we are in inflation and where we are in the Fed fight. How has your belief in terms of what's going to outperform, how you should basically invest, how has it evolved as we've gotten a labor market that remains hot? We get a Fed that's willing to go further than people ever thought was possible and only seem to be increasing their longer-term forecasts.
I mean, these things don't happen that often, but this still looks very normal. This looks like a cycle that the Fed let get out of control in the same way as we saw in the 1970s, and that requires an awful lot of catch-up and eventually leads to overshoot. I mean, to me, the big story behind the Fed of 2022 is the sectors which have done better and the sectors which have done worse, and it really does look as if technology leadership is over. I say that because it went down a lot, and it hasn't bounced a lot. And I think that really, really matters because you now have a sector that dominates market cap in the S&P 500. It absolutely dominates active funds. And coming into the last sort of 10 weeks of the year, which is the point at which everybody kind of sits down and decides what they want to do. I don't think we've got 10 weeks left if I really think about it. I think the temptation to rotate out of tech is going to be powerful. Now, it's not great news for the S&P 500 at the index level, because technology, as I say, dominates that index. But it might be pretty good news for the sectors that get some of the money that comes out of tech.
Without tech leadership, though, do we see gains, right, on a broad index level?
No, you probably, I mean, you certainly can have a range-bound market in which certain sectors do really well and in which certain global markets do okay. It's very difficult for the S&P 500 at the index level to make broad gains that take you back through that August high. I think that's a remote possibility, but I think it's possible to make money in this market.
And Michael, this raises massive questions for a generation of investors who've been told by their advisors at home to stay long US equities over a certain time period because that delivers you robust returns. And history shows that.
It does, but it can be a long time, history. It took 13 years between 2000 and 2013 for the S&P to get cleanly through 1550. If you were a passive investor for that period of time, you were living off your dividends, and that felt like a long time. Now, during that 13-year period, there were multiple opportunities to make money. There was a huge global bull market in the early 2000s. Obviously a very strong commodity bull market during that period of time. And plenty of money to be made within the S&P 500. But if you simply owned the S&P and sat in it, that was a 13-year wait.
This is a big conversation that I think needs to happen a whole lot more. The prospect of a lost decade for a massive chunk of the equity market, I'm not going to ask you whether that's what we face here, because you can't answer that with any degree of confidence. But do you think we're underestimating the risk of that, given that the conversation barely happens?
I think a passive investor who bought the S&P 500 or the NASDAQ in November, December last year is in for years of remorse. I just don't think it's going to be a great place to be. That doesn't mean they have years of continuous losses, but they're going to start with a beating, which they've had this year. They're probably going to lose more money at some point next year. And it's going to take an awful long time, I believe, for the S&P 500 at the index level to cleanly get through its peak of 2021. Now, other portions of the global equity market, including portions of the US equity market, I feel much better about.
Michael Schau, do you want to finish with that pocket of the market you feel good about?
I think energy's been the big story of this year. I would expect that to be the case through the end of the year. And at some point, the dollar will peak and global equities will be investable again. I'm not quite sure we're there yet.
Got to squeeze that in. TK, that's a big call from Michael.
It is.
The years ahead of us.
It's about coming down to low single-digit returns, which is where the actual assumptions really get threatened.
Michael, awesome to catch up. From New York City this morning, futures up by 0.6%. CPI just around the corner. Abramowicz says it's a big week. It must be a big week.
It is.
Midterms coming up
what
too.
you said. Come on.
Well, what if people just tuned in?
Well, then you can blame me.
You, wonderful.
Yeah, great.
All right, great. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The U.S. and Russia reportedly have held private talks on ways to avoid escalating the war in Ukraine. According to the Wall Street Journal, a peace settlement wasn't a goal of the discussions. The Biden administration was said to have warned the Kremlin against nuclear weapons. France's President Emmanuel Macron says the U.S., China, and other non-European rich nations must pay their share to help poorer nations deal with climate change. Macron is attending the UN Climate Change Summit in Egypt. More than 100 world leaders are expected there. They'll attempt to maintain momentum in the battle to limit planet-warming emissions. Over in China, exports and imports unexpectedly fell for the first time in more than 2 years. Overseas, consumers bought less, while demand in China was hurt by COVID-0 controls and a housing slump. Brazilian exports had been a major support to China's recovery in the past 2 years. And Twitter is asking dozens of employees it laid off last week to please come back. Elon Musk cut close to 3,700 employees last week to slash costs. Now, Bloomberg's learned that some were laid off by mistake, and others were let go before management even realized they may be needed to build the new features Musk wants. And Bloomberg's also learned that Apple expects to make at least 3 million fewer iPhone 14 handsets than originally planned this year. The cutback is due primarily to softer demand for the iPhone 14 and 14 Plus. Apple and its suppliers now aim to make 87 million of the devices or fewer. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
The party in the White House usually loses during midterms, but the reality is we still have a very strong pathway, not just to keeping the Senate, but really picking up seats in Pennsylvania, and in places like Wisconsin and North Carolina.
That was Senator Cory Booker there of New Jersey speaking on ABC over the weekend. Live from New York City. Good morning to you. Equities higher by 5 or 0.6% on the S&P 500. Equities up and yields lower by 2 or 3 basis points on a 10-year. 412.93 on 10s. In the FX market, the euro dollar, 99.80, positive 0.2%. I have to say, the governor of France, Guy Johnson, said it earlier out of London today. You don't usually see the governor of France this hawkish, but pretty hawkish this morning, Tom. As underlying inflation has clearly not peaked, we shouldn't stop on rates, and they want to keep on going. They want to keep on hiking.
I'm glad you bring this up. Lisa had the chart of the day on radio. It looked exquisite, which is just a vector moonshot up of EU inflation. And let's begin with the November 10 inflation report. Inflation in Europe is different than here. It's sustained double digit.
You can make the argument, and I've said this a few times, that maybe peak year-over-year inflation in America is in our past, and in Europe it might still be in our future. That's problematic because Europe is experiencing economic weakness already up front in a way that perhaps the US economy is not.
We will see. We'll continue right now with our election coverage. Your futures up 22. John, is that a high for the day?
Close. Just off them, Tom. Just off them.
25.34 on the VIX. It is something from your childhood where you show up with your parents. This is all pre-mail. At the election, and depending on what state you're in, you are 100 feet from the polling station under New York Education Law, Section 2031-A. That's what they do in New York. Anne-Marie Horton knows this. She lived it in New York State. Anne-Marie, tell me about the safety of voting this time around. It's percolating in the zeitgeist that, as we have for 250 years, there may be a little tension when we vote.
There are more things like poll watchers, and some say that these individuals are actually drawing concern for individuals that show up, the way they're dressed, unsure who they are, and maybe trying to influence or discourage people. There's a lot of talk of that, but we also have to say, in this election, as the prior election, there's also a ton of people that are just voting early by mail. And that also means that you don't need things or concerns about poll watchers. But this is something that has become highly political. And we heard from the RNC chairwoman this weekend on CNN, State of the Union, and she was saying that there should be no violence when it comes to poll watchers, but there should be poll watchers there to make sure that people can have the right safety of mind that the election is being carried out as it should be.
Anne-Marie, let's go to breaking news of some form, and it is another poll looking at minorities in America, the Latino vote, the black vote. Wall Street Journal with an update on this. To me, it was pretty much the trend that continues, which is it's an ever-growing Republican presence. Is it a tipping point presence, or is it just at the margin?
It does look like at the moment that they're just gaining more of these votes. It's not like these votes are not going to be coming out really in high margins and numbers for the Democratic Party. But what the concern is for the Democratic Party is that they're losing a huge part of their base. And I really look at Nevada, when you especially look at the Latino vote, and the fact that the incumbent Democratic senator is the first senator to be of Latin American descent, a Latina, and potentially she is going to be losing her seat. And the issue for these groups, black voters, Latino voters, is the fact that inflation is really starting to become front and center for them, especially in a place like Nevada, right? It's a huge industry that supports Las Vegas. These are very much so middle-class voters, and just the price of energy, food, rent, all of that is going up, and that is why you're seeing this shift.
Emery, we've been focused a lot on the Democratic Party and the loss of a number of seats as expected and as highlighted by these polls. With the Republican Party, how much is Donald Trump still the front runner in terms of setting the tone as he charts a path for 2024? And how much is it really moved beyond him to the issues that you're talking about that are attracting a growing number of people to the GOP?
Well, just this weekend at a rally, he literally put up a sign of the polls showing that he was double digits, way ahead of Governor Ron DeSantis, which he has a new nickname for that individual, as well as also his former Vice President Mike Pence. He is the clear leader at the moment of this Republican Party. And this is why you see a number of Republicans want him to come to their rallies, right? He was with Marco Rubio over the weekend in Florida. He's going to be with J.D. Vance, the Republican hopeful in Ohio. He is for sure the leader right now. The question is the next 2 years. Does he really make the final comeback bid and he is the name on the ticket, or does he end up playing kingmaker?
MH, final question from us. How long is this going to take to get the results?
Well, it potentially could take till December if Georgia goes into a runoff. So you have to consider that we might potentially not know the makeup of the Senate until just before Christmas. But, you know, it can take anywhere from the 24, 48 hours to maybe even a week.
Unreal. AMH, thank you. Down in D.C. TK, we could be doing this for another 4 weeks potentially.
Oh, particularly the Senate.
Well, you look at the polls right now and it looks like Georgia's going for a runoff, right?
Yeah, but I would suggest, and this is particularly important for people not tuned in over the weekend, the polls have tightened up over the weekend. I think that's the major message Monday morning, is it's not where we were Thursday.
I want one single name in the pre-market to look at right now, and I know Lisa's going to talk about it again in about 5 minutes. Apple, it's down by 1.9%. So Apple came out yesterday evening and said that demand for the iPhone was still robust, but ultimately, because of difficulties producing the thing out of China, they've got to clip supply of those handsets. We're reporting that actually the supply issue is one thing. They've also got a demand issue. And they're putting a number on it in our report as well, Tom. Apple expects to produce at least 3 million fewer iPhone 14 handsets than originally anticipated. Right. This according to people familiar with the plans. The reduction is primarily due to softer demand for the iPhone 14, 14 Plus model, cheaper alternatives to the high-end Pro offerings as well. That's our reporting this morning.
Yeah. It's there, and I really want to listen to people here. I think there's some confusion over this between the high-end models, which I'm speaking as an amateur, are the Pro and Pro Max, versus what you just said. It's confusing, the other 14s, and I really don't understand that distinction.
Well, I think we've also got to separate what we've heard from the company, Lisa, which is supply is going to be hit, but demand's still good. And what we're hearing from our reporting, which is that we can put a number on it, and it's not all about supply.
Especially given the chip story that we've been talking about, we've been wondering, why are we not seeing that in demand forecast from Apple? If people are not demanding as much of these goods, why isn't it affecting them? Well, maybe it is.
Apple down by 1.8%, down by 1.9%. We'll get you some morning calls on that from the analyst community a little bit later too. Futures up by about 0.5% on the S&P 500. We're doing okay. From New York City this morning, good morning to you all. This is Bloomberg. Live from New York City this Monday morning. Good morning to you. Here's the price action trying to build on the gains of Friday this Monday, with equity futures positive about 0.5% on the Nasdaq 100, up 0.4%. Last week, the Nasdaq 100 staging a recovery on Friday, but ultimately down on the week by about 6 percentage points. The worst week of the year so far, going back to January this year. So that was a big move lower, helped out by what's happened in the bond market, or rather, the help hasn't come from the bond market. A move of more than 20 basis points last week on a 2-year, and a range about that wide at the high, very close to 480 at the low, very close to 440, and right now somewhere in between with a 2-year at 467.97. As the price action in the bond market, we look like this in foreign exchange. Just briefly, looking ahead to the Fed speak, Lisa went through that a little bit earlier. I wonder how divided they will be. Not seeing that division from the ECB. European Central Bank and the governor of the Central Bank of France, to be precise, talking up more interest rate hikes, Tom, even with the economic weakness on the agenda for us all to see.
John, I don't get it. I'm going to go back to what Governor Bailey of the United Kingdom said the other day, looking at the length of 2-year recession. How do you raise rates into that length?
They're looking to do it, Tom. They're looking to do it, and we can keep discussing it. That's the cross-asset price action. Let's get you some single names. We can do that with Lisa. Hey, Lisa.
Hey, John, and you were talking about Apple. We need to start there, but I want to connect it to what Michael Schawel was talking about just moments ago on our show, where he was saying that he does not see tech leadership reasserting itself anywhere in the near future. What does this do, and how much have we actually seen that
priced in and reflected by some of their earnings estimates. Apple really is one of the main outliers when it comes to a more positive outlook than some of the other tech names. What does this latest information about them paring back the production of the iPhone 14 say about how long they can remain insulated from what we're seeing in the semiconductor space and what we're seeing more broadly within tech? And the shares down 2.1% ahead of the market open. Blue Apron, another one of the pandemic darlings. Everyone wanted to have home cooking kits in order to create some variety when they were home all the time. Those shares down 17% almost as they remove estimates, as they remove their guidance for the full year because things are disappointing. And Lyft reporting earnings after the bell. They are one of the ones that are cutting jobs. They're cutting 13% of their staff, they said last week. Those shares up just about 2%, but another one of those that perhaps is going to face off with some serious competition with Uber as the world gets to be a more discretionary place. And Meta, cutting thousands of jobs, Tom. Those shares are lower by more than 70% so far this year. That is just shocking to me to take a look. This is pretty much the poster child of a tech bubble that has popped.
Yeah, Meta, Facebook, 87,000 shares. How many are they talking about laying off?
They're thousands. That's what they're saying. They're going to be talking with people, and people have been looking for some sort of paring back. Those shares are up in pre-market trading because people are saying you've got to cut expenses, like you and John were talking about earlier. This is what it comes down to.
And we'll see it across industrial America, no doubt, and the path we're taking as well. Futures up 19. Joining us now, Megan Green, Global Chief Economist, Kroll Institute Senior Fellow at Brown University. Thrilled that she could join us this morning. Megan, I look at the linkage of this election into economics. In the heart of it, by one source, is rents, housing, mortgage makes up 33% of the family budget, the monthly budget of families, singles, whatever. How big is the inflation story wrapped around housing costs?
Yeah, so Tom, housing is a huge weight in the inflation basket as well, depending on which basket you're looking at. It's pretty big in all of them. And of course, it feeds through with a pretty big lag because most of us are, signing leases once a year at most, if even that. So I think housing inflation will continue to feed through into the overall basket. And that's why when we get this inflation print later this week, it'll still be much higher than the Fed wants it to be. I think it could come down a bit from last month's at least. So it could decelerate a little, but it will still be really high.
Well, in the economic world, the Fed world, should we partition out rent and look at other disinflationary tendencies? Or do you have to look on a core basis in the aggregate?
Yeah, I think what you have to do is look at everything. I know that's a classic economist two-handed answer, but I think because rent is such a big piece of household spending, it's important. That's why it's reflected in such a big weight in the basket. But of course, inflation is a deeply personal experience, right? If you own your house and you've paid it off, you're not that affected by housing inflation, even if the overall inflation figure is high. It doesn't hit you. Whereas if you have lots of medical costs, for example, and you have inflation in healthcare, then that would really hit you. So I think we need to look at all different kinds of calculations of inflation. That includes the one the Fed looks at, the PCE, which calculates or weights housing and healthcare actually differently than CPI. But I also think we need to look at measures of underlying inflation. And there, I think the New York Fed's underlying inflation gauge is very interesting. It's not that great as a metric of where inflation actually is, but it is really good at predicting inflection points. And it suggests that peak inflation may be behind us. So that could give the Fed a little bit of reason for optimism.
Where are we heading, Megan? How long will it take before we get to 2%? Or is that basically a pipe dream, given the global winds and where we are?
Well, no, I think inflation will come down over the course of the next year. Will it hit 2% by the end of next year? I don't think so. But I think very few economists are actually asking what the world and the economy will look like on the other end of this, when the dust is finally settled, when we don't have war or a pandemic or any of these successive supply shocks. And, I think when we are on the other side of this, actually, we'll still be stuck in this secular stagnation environment with a glut of global savings. If you think about the main structural factors driving lower inflation over the past 15 years, it's things like technological innovation, market concentration, low worker power. Those things have all been turbocharged by the pandemic. The only thing that hasn't been turbocharged is globalization. That's been a driver of lower inflation. And there, I don't think we're actually deglobalizing. I think we're just globalizing more slowly. Now, there's one way I could be totally wrong about all of this, and that's if we're really serious about the green transition. And there, I think the answer is different in Europe and the US. But if we are really serious about it, we are going to be pricing in the cost of carbon, which we've been considering zero before. So that will inherently be inflationary. I just don't think we're that serious about it, particularly in the US.
Megan, how does the political backdrop really factor into this? And we've been talking about a lack of fiscal spending and how that's being viewed as a positive in markets. How do you play that out in the inflation outlook and honestly, just in terms of growth over the longer term?
Yeah, so if you look at fiscal spending, and this goes for the US and also the UK and Europe, if there's a drive for austerity, then that's going to be a drag on demand. That's going to push us further into recession, and that will bring inflation down. Whether you consider that a feature or a bug is up to you, but it will be disinflationary at least. And the second piece of the elections, the implications for inflation, get to the point I just made about the green transition. If the Republicans take the House, I think we're less likely to have any major efforts for the green transition over the next couple of years. And so that's also less inflationary than it otherwise might have been.
Megan, do we understand the lift we've seen in hydrocarbons? I was just working on the Bloomberg. Folks, this is easy to do on the Bloomberg. There's just terrific commodity coverage. Natural gas off the bottom is up 290% off the summer of first-year pandemic. Diesel, a gallon of diesel is up less. It's up 190% from that summer of 2020. Do we understand in our punditry the shock that we've seen in hydrocarbons?
I think we do. I mean, a lot of it is supply and demand coming from successive shocks from a war, but also coming from OPEC actions. And so, I think we were in the developed world, particularly in the US and Europe, facing an energy crisis before Russia invaded Ukraine. And now it's hit us all in the face because it was accelerated when Russia invaded Ukraine. But I do think if you talk to energy analysts, they've certainly seen this coming for a while. Most of us were ignoring it, particularly in the US, because we could conveniently. Oil prices weren't that high. They've all gone up now. So I think we are having to face this. Yeah.
Unavoidable this year, Tom. That's for sure.
I have forgotten this. These three charts I just looked at in the Bloomberg: natural gas, gallon of diesel, gallon of gasoline up 113% off the bottom. I think we forget the scope and scale from the summer of 2020.
Massive moves. Megan, thank you as always. Megan Green there of the Kroll Institute. We're just going through the South Side stuff on Apple. Lisa went through the difficulties that company is said to be having at the moment. B of A, Barclays cutting price targets on Apple this morning. Deutsche Bank talking about the risks to Q1 estimates. JP Morgan doing the same, implying downside to Q1 estimates. Tom, that's the story for Apple this morning.
Well, it's going to be readjustment, and I believe we have day-and-I scheduled 164,000 employees. A lot of that, I assume, is retail in the stores as well. But is it unimaginable that they would go through some form of layoff like what we're seeing? And Lisa mentions Facebook.
We're seeing a ton of layoffs in tech, aren't we?
Yeah, I mean, it's just an adjustment.
Real cuts.
Yeah.
Is it just an adjustment, Tom, or is it something bigger than that?
I don't know. I did an NFT, and I think I was top of the market. It hasn't worked out.
What did you buy?
I made it.
You made an NFT?
We made an NFT at home, went down in flames.
What was it?
It was an image of Vet Bill and Kennel Fee, and, just sort of digitally with a surveillance. They were wearing surveillance swag.
That's dreadful.
It went down in flames.
Did you sell it to anyone? Or you just...
No, I did not sell it. In fact,
How dare.
it was like, it just didn't work out. But, remember SPACs? Was that like 2 cups of coffee ago?
That was a good time, wasn't it?
That worked out.
That's ridiculous.
What does that mean for Wall Street? This is a Shonali Bassett question, but what does it mean for Wall Street? I believe it's November. They got weeks to adjust to figure out the game plan for January and February.
I think they'd love to see some economic stability return so we can get some real deal flow again. And Lisa, right now, we're not getting that, are we? At all.
No, although maybe next year, if there's consolidation, it won't necessarily be the free-for-all, but we might get some consolidation. Just on this point, though, of the layoffs in big tech, you do wonder at what point they've really right-sized and you could start understanding what the future is. I keep thinking about what Michael Showell was saying.
It's super important.
It was really interesting how we are just seeing the end of tech leadership as we know it. And there is more to come. And I wonder what this looks like given the growth, the generation of a lot of the salaries.
That sounds super bearish, but I say this because it's worth the discussion. lost decades aren't unheard of.
I'm with you.
And if you think that asset class might go through one of those, then what does it tell you about a major weighting on the S&P and just being long the index?
Well, yeah, and that's the headline index. But
Sure.
there could still be gains. And at what point does that shift back to Europe because of the tech dominance?
Oh, the global story?
Yeah.
We're going to do the global thing again. How many times have we said buy Europe, Tom? Buy
Exactly. Or as Michael Shaw alluded to, exactly when do you buy international?
Sure. When the dollar starts to
When the
weaken,
dollar
I guess.
weakens. Good luck with that.
Futures right now up 0.4 on the S&P. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Ukraine's President Volodymyr Zelensky wants Iran to be punished for helping Russia. Zelensky said if it wasn't for Iran supplying weapons to Russia, quote, we would be closer to peace now. Both Ukraine and the U.S. say that Russia is using Iranian drones in the war. Ryanair has lifted its passenger goal for the year and downplayed the likely impact of a recession. Europe's largest discount airline said earnings should top $995 million.
We've seen very strong forward bookings and fares into the October midterm, school midterm. Christmas looks very strong. Next Easter already, next summer looks strong forward bookings. But we'd be cautious into this winter again. Everything looks good. I mean, what's unusual is this time I think we're going into a recession with full employment. People do seem to be spending, and they're certainly traveling.
Ryanair says it will offer 10% more seats this winter than it did before the pandemic. Facebook parent Meta Platforms reportedly will start laying off thousands of workers this week. According to the Wall Street Journal, the job cuts could come as early as Wednesday. Meta had been struggling with growing losses. Plus, it's also been investing heavily in developing its metaverse business. Shares are down about 73% this year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
I'm a little bit cautious. I don't want to be 100% hedged at $92 a barrel because I think there's as much risk that oil will fall below $90 a barrel into next summer or that it will rise to $120 a barrel. The situation is just too uncertain. I think we're comfortable where we are.
Michael O'Leary, always great to hear from the man at Ryanair. Always fantastic on TV as well and on radio. Live from New York, here's the price action. Your equity market shaping up as follows on the S&P 500, going into an interesting week ahead. On the S&P, up 0.4%, yield lower by, let's call it 3 basis points on a 10-year, 413.14 on a 10-year, and in foreign exchange, 99.80, Tom. Firmer on the euro side of things, up 0.2% on that currency pair. Crude 91.80 was softer this morning after a big rally recently. WTI just north of 91 and down by about 0.9% on the day.
Let's go to oil right now. Something I'm watching. Brent crude just dipping under 98, 97.81. Regina Mayer knows this. She's global head clients and markets at KPMG with real expertise on hydrocarbons. Regina, if China comes back and there's the whispers of China coming back, what does KPMG think? What does a more buoyant real GDP in China, a reopening China, mean for Brent crude?
Well, I think that just creates a lot more upward price pressure, Tom. The thing that's keeping us relatively mild is we continue to expect increased demand because China still really has not come back in the way that we expected. And we haven't seen the impact of inflation and recession on consumer demand for hydrocarbon products. And we're already in a tight supply situation that you and I and others have talked about probably ad nauseum. So if China comes back, I think that's where, as a previous CEO said, that's where you get into the triple digits for WTI and Brent.
You've got a huge Texas and middle of the country feel. What is the mood of not Exxon or Chevron or the others? What is the mood of the independent oil producers out there as we go into this election?
So I don't think that we're expecting a lot of dramatic changes, regardless of what the outcome of the election is. But the mood in Central Texas is, still pretty mixed, right? We're achieving great financial results in large part because we're benefiting from higher commodity prices. But the days of drill, baby, drill, and we're going to frack until the cows come home are long behind us. And Wall Street is really what's driving the oil patch, particularly in the U.S. not Washington.
So let's talk about that, Regina, especially as you have the confusion from President Biden talking about no more drilling after demanding more drilling. This confusing message from Washington. Is there a very clear message from Wall Street? And if so, what is it?
The very clear message from Wall Street is dividends, returns, shareholder value, free cash flow, focusing on return on investment. And they're not increasing drilling and production in the way that we normally would have expected to see with this kind of frothy price environment. We also, though, the sentiment is also, though, affected by labor, which we've talked about, economists have talked about this quite a bit, shortage of labor and supply chain cost increases for core materials. So those are impacting the ability for the shale players to radically increase production, as well as their sensibilities and sensitivities around delivering shareholder value in the wake of what their investor community is demanding.
Do you think that it's likely that we will see the $72 a barrel price tag that this administration has pinpointed as a place where they'll start rebuilding the Strategic Petroleum Reserve? Or do you think that we have seen close to the lows for the next year or more?
It's a tough one to call, Lisa, but I'm not as bullish on long-term crude price for the into 2023. I think that with supply continuing to build up, with things settling down in terms of the overall market, if we get a calmer sensibility of what's happening with the hostilities in Russia, I'm hopeful that we can get back to more sensible oil prices in the mid-2023s. To be perfectly frank, this commodity price environment is not good for the industry, and it's not good for our globalization. It's not good for individual countries either.
Regina, what is inflation doing to our future production of oil as a general statement? You're at a meeting with KPMG and somebody goes, well, it's not double-digit inflation, but it's 6-7% inflation. What does that do with the margin to oil production?
Yeah, no, it's creating a lot of pressure on margin, right? So labor costs are going through the roof. As I mentioned, there's the supply chain challenges. Cost of capital is going way up. There's what's interesting about what government has done when you look at the Inflation Reduction Act and the infrastructure spend. There's more incentives and more long-term liquidity that the government is providing in the form of grants and loans that will continue to spur investment in emerging technologies like carbon capture and sequestration and hydrogen and direct air capture even and renewables, but not for hardcore fossil fuel investment, which we need in the short term for energy security purposes, because we're in this high price environment. So we're sort of in a negative cycle that it doesn't spur the right activities, and Wall Street's really calling the shots.
Well, Regina, let me just put a bow on it then and ask you this question. Are the midterms a factor or not in the outlook for the commodity story?
We don't believe that it is. And when you look at what the legislation that was passed with the Inflation Reduction Act, coming off the back of KPMG's Global Energy Transformation Conference, we had traditional energy companies and emerging energy companies all seeing benefit from that legislation. So I think you're going to see broad-based support across the industry for what has been done. What I'm hopeful for is we can decrease the level of hostility and aggression when we talk about the energy industry, because without all of us working together collaboratively, we can't solve these major technology issues that affect climate. We have COP27 going on right now in Egypt and affect our near-term and longer-term energy security requirements.
Regina Mayer, thank you, as always, of KPMG. Crude this morning down 9 cents on WTI, $91 and let's call it 80 cents on Brent crude, 97.84. We're down, Tom, about 0.75% there.
Well, you just have to watch it, just based on news flow. I mean, you're 1-2, oil shortage, China demand stories, some $100 Brent crude. But again, I would go to the lift in nat gas up to $7 in the United States. And, I haven't looked at the follow-on from copper with the China Open off LME. Lisa, we look at LME for copper.
Thank you. I appreciate that.
That's helpful, Tom.
Thank you.
Please, Lisa's on board.
Well, I just want to point out that what she said, what Regina Mayer just said, was fascinating. That basically it does not matter the political sphere. It does not matter the political backdrop, that Wall Street has spoken and we're not getting that kind of investment. Now, what that does to prices, that remains a debate, right? So she's saying perhaps it's not that that bullish for prices, whereas other people say, particularly JP Morgan, structurally, this is the reason why prices of crude are going to be so much higher.
This is why people are bullish the oil patch.
Right, exactly.
I think if you're a bull right now, you don't want that story to change, do you?
Exactly, because they're not going to drill. So that's not going to be sort of the elasticity of increased supply. So that's going to be, basically just causing there to be anytime there's a surge in demand.
The China reopening story, I still don't get. The rumour mill doing the rounds, and we've heard from the Chinese over the weekend from the National Health Commission. They're going to resolutely adhere to the strategy of COVID zero. There seems to be no change at the moment, but the conversation continues.
Yeah, talk about mixed signals.
Futures up 0.4 on the S&P. This is Bloomberg.
We're not seeing cracks in the labor market yet, and so the Fed is going to have to continue on its path.
This is going to be a very slow grind into this weak labor market.
What do we know so far about the inflation call? Everybody's gotten it wrong.
The consumer has the savings buffer. The savings buffer is coming down.
I don't think that consumers are really seeing the type of stress that would lead this economy into recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene on a Monday before a most important Tuesday. We welcome all of you on radio, on television, in Washington tomorrow, and the following day with an indeterminate election, I'm told, John, on Wednesday morning as well. I love what John Anzalone, writing with a Democrat-Republican poll of the Wall Street Journal in the last half hour on Latino, on black votes, and he says this election is a paradigm shift. Are we going to see a paradigm shift in that inflation
It's
report?
amazing, Tom, amazing. Let's start with the election and then go to CPI. Yeah. It's amazing to see the president campaigning in New York, a state he won by 23 points in 2020. Yeah. That's just amazing to see, and we could talk about that later. We've asked the range of guests this morning what they'd be watching, the midterms or CPI. I think you both said CPI this morning.
Caveated.
With a near-term, longer-term outlook. And Lisa framed it nicely, I think. In the near term, you want the CPI read. But in the longer term, when it comes to the midterms, you want to understand the composition of DC to really get your hands around whether we can have any kind of counter-cyclical circuit breaker whatsoever if this economy rolls over. Because the Fed is saying we're unwilling to provide it. In fact, the objective is to slow down growth. And I don't think we have the fiscal space at all, even if the Democrats wanted to do more based on what we saw take place in the UK.
Or will they? And is the paradigm shift here, John, that we'll have fiscal gridlock? And that seems to be I'll call it the tendency this morning is towards gridlock.
If you ask people on Wall Street, they'll say that's what we want. And if you dig a little bit deeper, it'll be because something like they don't want people to do lots of spending, complicate the Fed's effort, boost inflation, all that good stuff. I get it. But the conversation that Lisa and I had in the last couple of hours is basically, okay, that's the short-term story. But if you land in about 12 months with inflation lower, bond yields lower, and you get that fiscal space once again and it returns in Washington, and you can't provide that buffer in a downturn, I wonder how bullish people would think that is at the time.
My reality is inflation is front and center. We see that. We mentioned rents with Megan Green earlier. We see the oil price, Brent crude, 97.83. Lisa, I wandered through Whole Paycheck this weekend, and I'm sorry, aisle to aisle, it's tangible.
Whole Paycheck really is just that. Though this really raises an issue of how long it will take to crimp that, whether it's just the Fed's job, and how long it will take to really understand what we have done, both with the withdrawal of fiscal as well as withdrawal of monetary support, how long it takes to bleed through and what the damage is that it does to the economy. And so we're looking for a CPI report. Maybe it'll show us a 7 handle. Okay, 7.9%. Great, it's going down. Not quickly enough. And the drivers of it are still very much in force.
With that, are we going to get an election report? John mentions New York State. For our international audience, the governor from Buffalo challenged maybe downstate, is how I'd put it. But we're going to get an inflation report Tuesday evening with David Weston.
Well, so how much is this really a read on inflation, right? In terms of the election and the outcome, and Kathy Hochul, I would say in New York, the reason why this is such a hard election to get your arms around is that there are different issues that are driving people to the polls in different places, and so you're seeing a very disparate message with inflation in the backdrop, but also at the forefront other social issues very much, whether it's crime, whether it's abortion, whether it's something else that's really making people come to
John,
vote.
today data here. We've got some breaking news we got to cover. But, John, I'm sorry. I think the foreign view is important. I look at the British ballet and I'm going, this is crazy. How do you look at the midterms?
The midterms?
Yeah.
From what perspective? From a market's perspective?
No, from a John Farrell
Considering that you're British.
From an AC Milan Tottenham perspective.
Let's do it from a Georgia perspective.
Okay.
The outcome of the Georgia runoffs in early 2021 were hugely consequential for everything that happened in markets for, I would argue, the next couple of years. Would we be having this conversation in the way that we are if you didn't have the outcome of those Georgia runoffs in 21 go the way they did, Tom? Would we have had a fiscal package that large? How different would this conversation be politically if this White House wasn't able to get its way? Because you wouldn't be able to sit here and blame the White House, would you? You wouldn't be able to sit here and blame fiscal stimulus in quite the same way.
The White House, is it?
So when it comes to Georgia, we face the very real prospect of a runoff again. And we'll speak to the experts about what's happening on the ground there. But you need to get above 50. If you don't, you go for a runoff 4 weeks later. And it looks like that's what's going to happen. So if everyone's looking forward to waking up on Wednesday morning with some firm set of results to go ahead and just kind of fade this whole event and start buying equities again, we could well be in a situation where it takes a number of weeks to find out the answer to that.
I agree. I do not see this as a buy signal coming Tuesday night or whatever. Let's do the data right now. I'm going to look at Brent crude 98.21, John. We're buttressed up there, not through the highs of Friday.
I'm going to look at euro dollar just briefly. North of parity a little bit earlier this morning, back down to 99.95. Looks like a sale, doesn't it? 99.95 euro dollar.
Well, especially when you say it like that.
I've got a future. I was told I've got a future trading cattle. Euro dollar 99.5, 40 cents, you know, all of that good stuff sold.
Yeah.
Sold to the good man in the bow tie. Your 10-year yield down 3 basis points, Tom, 412.72. Do you like that?
Do
Does
they
that work
talk
for you?
like that in British auctions?
They do that too, of course.
They do the whole cadence thing?
Yeah.
Okay.
Do you like that?
Let's continue forward here with debt. Futures up 20 right now. Anders Persson is not looking at futures. He's looking at the bond market. Chief Investment Officer for Global Fixed Income at Nuveen. Anders, what I love about your report is you say you've got to go out to high yield rather. You've got to go out to certain loans and notes. Provide a distinction there. What part of not full faith in credit, not quality corporate is the best opportunity?
Yeah, good morning. Thanks for having me. I would say we're very much focused on making sure investors are diversified right now. I think our key message to investors is that we are facing uncertain times. Many of the things that you just discussed here this morning and a lot of the different outcomes that we're all debating for 2023 will have very different outcomes for different parts of fixed income. But all in all, we're really focusing in on the facts that the income level opportunity is very interesting, and income generation is the vast majority of returns for fixed income more broadly. So from that perspective, we're looking at the higher income side of fixed income as an opportunity. We do like parts of high yield and leveraged loans. We're focusing in on the higher quality, the stronger credits, the ones with durable free cash flow, really making sure you understand what you're putting into your portfolio. And I think really active management is going to be ever more important in a year like 2023. Now, the area we like as well is preferreds. We do think that that's a space that's offering a little bit more attractive risk reward. We do think money center banks, financials, and what have you have really kind of a solid foundation to go into next year.
It's interesting that you're going into the riskier aspects of the market as we talk about the lag effects of some of the tightening, both on the monetary side as well as the fiscal side. How concerned are you that we don't really grasp the scope of the damage being done by raising rates as quickly as they have, as the Fed has, and by the idea that there will not be the kind of fiscal spending to offset any sort of pain in the economy?
Yeah, no, I mean, that certainly is a key concern here going into next year. And we're actually expecting more uncertainty, volatility. We're expecting spreads to go a bit wider, possibly retesting some of the wides that we saw in June of this year. So we certainly are being mindful of all the moving parts here. And if we were to go into more of a hard landing, then certainly some of these higher income kind of type asset classes will have a tougher time. I think what we're trying to be mindful around is that a lot has been priced in. If you're willing to take a little bit more of a medium to long-term perspective, legging into some of these asset classes, particularly if you compare to everything else that's out there. If you're looking at equities, we're much more comfortable with fixed income, and even some of the private kind of type alternative spaces we feel like public fixed income, particularly with diversified lens, is going to be more attractive.
I might have a football club for sale for you, Anders. Stick around if you want to buy that. Anders Persson there of Nuveen. Here it is from The Athletic. Fenway Sports Group, owned by and founded by, of course, John Henry, of course, known to you, many of you, because of the ownership of the Boston Red Sox. Tom, FSG inviting offers for a possible Liverpool sale. This, of course, is Liverpool Football Club. According to The Athletic, they're reporting that Goldman and Morgan Stanley have been retained to help with the process. TK, there's been some murmurings of this, I would say, over the last few months, but here we are based on The Athletic reporting.
This is different, I would suggest. I'm, of course, speaking, John, without your expertise, than any of the other turmoil in the Premier League we've seen. These guys are wonderful operators. It is without question they saved the Red Sox, and they saved old Fenway Park, combined with Tom Werner and the rest. These guys are competent. And what I suggest, John, they sell from a point of strength.
Oh, without a doubt. I'd go with that too. What did Chelsea go for? $5 billion US.
John,
a little north of 4 billion sterling. So
I
big
paused
numbers
on YouTube and saw that magical point where the players come out with the little kids.
Sure.
And there's the tots and all that, but there's just that Liverpool red with the payroll and the quality of the players with Salah at the end of the line. I mean, is it like the New York Yankees?
Well, I'm going to offend, not quite, but close. I'm going to offend maybe some Chelsea fans and look at that Chelsea price of about 4 billion sterling, 5 US, and say that Liverpool as a brand has more of an international reach in a way that Chelsea does not, specifically over in Asia too, if you just look at the fan base. And I would suggest that maybe that number's going to be bigger than that, based on that alone, and that's a very shallow set of analysis, and I'm sure the bankers will do a lot more work than that, I'm sure.
And I think
that seems to be the direction of travel.
Well, yes, and of course, folks, as we know, we need surveillance research on this, and we need to go up to Anfield. They've put a lot of money into the stands.
That would be cool if we went into Anfield, wouldn't we?
Yeah,
I was just waiting for you to say 5 billion, you have 5 billion, 5 billion, 6 billion. Anyone for Liverpool?
I don't know if John Henry wants me to do the auction process live on Bloomberg Surveillance.
We're going to have an auction. We're going to see if we can sell it. So there you go. I'm waiting for it.
We were talking about deal flow and banks trying to make some money. The Athletic reporting that Goldman and Morgan Stanley retained to help with the process. So, reporting from The Athletic this morning, Tom. We'll see what happens here. Dan Ives might have something to say on this and on tech. The senior equity research analyst of Wedbush is going to join us shortly. Apple in the news. Apple is basically seeing production get hit. We're reporting here at Bloomberg that there is a demand story going on here. Apple says demand is still robust. We'll break that down for you in a moment. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The U.S. and Russia reportedly have held private talks on ways to avoid escalating the war in Ukraine. According to the Wall Street Journal, a peace settlement wasn't a goal of the discussions. The Biden administration was said to have warned the Kremlin against using nuclear weapons. In China, exports and imports unexpectedly fell for the first time in more than 2 years. Overseas consumers bought less, while demand in China was hurt by COVID-0 controls and a housing slump. Brazilian exports had been a major support of China's recovery in the past 2 years. Twitter is asking dozens of its employees it laid off last week to come back. Elon Musk cut close to 3,700 employees last week to slash costs. Bloomberg's learned that some were laid off by mistake and others were let go before management even realized they may be needed to build new features that Musk wants. Bloomberg's also learned that Apple expects to make at least 3 million fewer iPhone 14 handsets than originally planned for this year. The cutback due primarily to softer demand for the iPhone 14 and 14 Plus. Apple and its suppliers now aim to make 87 million of the devices or fewer. And impounded Russian super yachts are costing millions of dollars to dock and maintain. And American and European taxpayers, well, they're footing most of the bill. Bloomberg Business Week reports it can cost 10 to 15% of a yacht's value to keep it running every year. At an ultra-conservative 3%, the U.S. and Italian governments will pay more than $50 million a year to maintain their fleets. I'm Lisa Mateo. This is Bloomberg.
The consumer has the savings buffer. The savings buffer is coming down. I think a high real rate is going to put pressure on the economy. I do worry about the corporate sector. The longer we stay at these high real rates, you're going to see credit contraction.
Love hearing from Priya Misra, the TD Securities head of global rate strategy. Big week ahead. Bramo keeps telling you CPI coming up a little bit later this week.
Low blow.
Midterms coming up too. I say that every Monday. Everyone knows that. Every Monday, Ferro's going to say, big week ahead, big week ahead. Futures really right now on the S&P.
That's the way the whole year's been. And it's the renewed volatility. The VIX is 25, John. It used to be 15.
I've got one stock to watch in the pre-market. Big move in Apple. Apple lower in the pre-market by about 1%. Not a major move, but a big conversation is taking place.
And we had it on Twitter, John and I apple picking this weekend. And John, you look up the Hudson River, you look at the Macintosh apple versus the Paula Red. It's a tough decision.
Well, let's see what you can get hold of, and that's the problem. Where's the supply coming from? In China, things are locking down again. You see the difficulties around the region that produces the iPhone, and Apple is saying that they've got to trim expectations for the amount of production they can get. We're basically reporting here at Bloomberg that you can expect Apple to produce at least 3 million fewer iPhone 14 handsets than originally anticipated this year, not because of production difficulties, but because of demand.
Well, let's talk about that right now, and we will get, not on the Macintosh, that's old news, but on iPhone and Pro Max and that. We are thrilled to bring you Dan Ives, Senior Equity Research Director at Wedbush. Dan, you and I were talking about this. I need clarity on sales. The two fancy phones with the phone war that's out there, T-Mobile and all that, am I right that the Pro and the Pro Max are selling like hotcakes?
Look, I think demand on Pro has been unprecedented relative to what we're seeing in this macro. And I think you saw that with September results and even the guidance. And you see that even come out of China. But for Apple, as we saw last night, the issue is not demand, it's the supply. And obviously the zero COVID in China, that's the gut punch that we're dealing with this morning.
Okay, so weight that on a scale, and I don't mean to get mathy here, Dan, but I think we do with the Bloomberg reporting. What percent of this is about China lockdown? What percentage is about demand of the phones underneath the Pro and the Pro Max?
Yeah, so let's break that down. In terms of the Bloomberg report, that's really talking, when you look at iPhone 14 Plus, I mean, that's really been a strikeout for Apple coming out of the gates. That's where you're seeing the lower production in terms of coming out of Asia. But on the other side, the strength is coming out of iPhone 14 Pro. A typical mix is about 60-65%. We think it's closer to 80-85% this quarter. That's bullish. That's positive for ASPs, positive for margins. And that's really what the street's focused on here.
So, Dan, I guess that you're rejecting this idea that this could be demand-driven reduction in production. Is that correct? That you think that that's perhaps not a correct interpretation of Apple's announcement?
Well, I mean, if you look at just off the quarter, I mean, when Cook gave guidance, and I think across big tech, the last 4 or 5 years, no one's been better in terms of forecasting. They're seeing strength. And I believe iPhones would still be up year over year. But obviously, in terms of the zero COVID shutdown, we think that probably takes off 2, potentially 3% of iPhone units. Demand's not the issue. It continues to be supply. And I think that's the frustration for Cupertino in terms of what they're dealing with in China.
Although you're not necessarily seeing people expect bigger margins. In other words, we're not hearing that perhaps Apple will raise the price of the iPhone 14 in response to the lack of supply. So does this mean that Apple and a lot of companies have kind of reached the end of how much they can offset some of these pressures with higher prices?
Yeah, Lisa, it's a great point. I also think it speaks to why within the four walls of Cupertino, why it's so important from a chip and own their own ecosystem. And I think that's what Apple's done. It gives them more flexibility on the supply chain and from a margin perspective. And that's something that's playing out more and more. But I think really the narrative is that iPhone 14 Pro, despite obviously the dark storm clouds, is seeing strength, despite what we see, what I'd call almost a nightmare large cap tech earnings season.
Dan, in the hallways of all these fancy tech people with their egos and their business beliefs and all that, what's the difference between a hiring freeze and outright firings? Explain that body language, not company to company, but within the industry, within the culture you follow.
Well, in the Valley, especially in tech the last, I call it 7-8 years, I mean, a lot of these companies were hiring 15, 20, sometimes 30% more employees per year. So in terms of a freeze, they were just used to it. You need 10 more engineers in a project, you get it. Now what you're starting to see clearly a slowing down. You're starting to finally see these cuts. A lot of these companies are spending like 1980s rock stars, but you're starting to see now cuts across the board because they really want to make sure that they get ahead of this from a margin perspective. I still don't view it as ominous. It's still more between a freeze and slight cuts. If it continues, then it becomes a dark winter.
Hey, Dan, thank you. Dan Ives of Wedbush, still looking for 200 on Apple. Barclays this morning, equal weight on the stock, price target cut, 144 from 156. Apple warning on an iPhone 14 Pro production shortfall is what they call, quote, a rare move. The analyst Tim Long saying he's cutting his estimates for the iPhone 14 and AirPod units for the December quarter. Going on, Tom, to talk about that he's also picking up weaker sell-through signals in his own checks. So it's not just our reporting, others too, feeding into the big debate at the moment around that name.
Well, the big debate, and I get that it's China, but it's more than that. And I'm fascinated how Apple, who's essentially been untouchable, how do they adapt to it? I mean, they're not Lyft. Lyft adapts, and they have earnings today, right?
Yep.
They cut costs. Does Apple? Have I ever heard of Apple cutting costs?
I've asked the question of the analyst community, and I'll continue to ask it. When was the last time some of these companies had a true, real, cyclical test? And really think that through, because the pandemic is not it. Given the fiscal transfers we saw through the pandemic, Lisa, I would argue that that's not a good model to argue that they've had a cyclical test. And in some spaces, big tech actually got an acceleration of demand from the pandemic. So that's not a fair comparison. When was the last time these companies had a major cyclical test?
And through the lens of Apple, because on a broader level, there's cyclical and then there's structural issues with respect to whether social media is popular or not, or which platform is the star one at a given moment. But Apple, I'm thinking about this question of demand, and I'm also questioning how much they can really move away from China, right? I mean, if this is going to be an ongoing problem, and this is an area that produces 85% of the iPhone 14, how do they move away and create the infrastructure quickly enough to avoid this happening again in the near term?
How do they move away?
I'm not sure they do.
Without also harming the demand side of the equation in the country too.
That's a really good point. That's
Do you
an
get
excellent
that kind of that pushback, that blowback from moving your production away from the country?
Apple's toast.
Yeah.
What's
Like
that? Toast.
They've been
How many
toast like
times have we written that
14
headline?
times.
14 times?
14 times.
Every time the iPhones come out.
John, we got a crisis. Well, we'll come back on this.
You were about to say we've got a crisis.
We got a crisis. We'll come back and talk about it.
I can't wait. 60 minutes away from the opening bell, live from New York. Good morning to you. Equity futures look like this on the S&P. They fade just a little bit. Still positive, though, up 0.2%. Big day of gains. The raise in a week of losses on the S&P 500 on Friday. The S&P down by about 3.35% last week. Yields much higher across the curve last week, particularly at the front end. This morning, yields a little bit lower by a basis point on a 10-year to about 4.15, Tom. No big moves here going into a big week ahead. CPI, midterms.
Yeah, big week.
What do you want to talk about?
What's a
crisis? What's a crisis?
Talk about inflation
sure,
right now. The three of us to Milan.
How much?
Tots Milan, $38,000.
That's American Airlines.
That's United.
United. Business to where?
Business to Milan.
Business to Milan. Okay.
Three of us, 12 times 3. That's where we are.
Try Zurich with United, and then we can get the train down. Often that flight can be a bit cheaper.
We could go after Davos. Fabulous, John.
Go.
Thank you so much.
There's a plan.
That's a plan right there. Neela Richardson with us, chief economist at ADP Research, and she's fabulous because not only working with ADP with her thumb on the pulse of American wages, but also her work on government economics. Thank you so much for joining today.
Thanks for having me.
You walked in and said, "Hey, stupid, this is what matters." In the media, and I'm as guilty of this as anybody. No, it's Monday. It's Stupid Monday for me. But the media overweights technology because we got technology in the brain. And you're saying layoffs at Lyft or Apple, wherever, it's not that big a deal?
Well, it's a big deal for the tech sector. It's a big deal for tech employees. But in terms of the overall workforce, tech information sector is about 2%. So when
I never would have guessed that.
2%. So when you're talking about what's really the heavy hitters in the labor force, it's services. Services is, when it comes to consumer-facing services like leisure and hospitality, which we know suffered the most during the pandemic. Retail sector, that's important. Professional business services, so all your accountants out there, that's important. But tech is marginal.
What is this service dynamic into this election? Coming off the ADP report, coming off the full employment reports on Friday, what's the service dynamic right now?
It's all about wages. And it's all about leisure and hospitality, really, because that has been the big growth sector. It's interesting. In January of 2021, the wage growth in leisure and hospitality was the lowest of any sector we track. Now it's the highest, and it's been at double digits since the summer for a very long time. It's what's driving up wage growth. But as that dynamic changes, you might see wages start to peter out in terms of acceleration, but still remain high at these elevated levels.
We're all waiting for this supply side response. Any sign of it whatsoever?
Well, yeah, a little bit here and there.
Just a hint of it? Can you walk us through it?
In pockets. I mean, there was a little bit of movement, and I'm talking about labor supply.
Of course, yeah.
Hopefully we're on
the same page. We're on the same page.
We did see some people. There's so many supply issues here. But we did see some people move back into the labor market in the fall. We had the promise of a normal school season, and so that was helpful. But if you look at that labor force participation rate, it's still stubborn, and it retreated last month. That is an issue because that suggests a bit more permanence to the fact that the working age supply has, shrunk. And what does that mean for growth going forward? Not just when we get through this inflation cycle, but in the years ahead.
Well, this is the inflation cycle I wanted to talk about. So on the way up, inflation kicked higher really, really quickly. Do you consider it to be stickier on the way down? Is that the way this usually works out?
It's stickier, and I think it's going to be more persistent. The Fed's already admitted that the persistence is much more than it has been in previous cycles, that the supply shortages, those dynamics, globalization, automation that were pushing inflation down they don't have the same power they used to. And the demographic changes are not having the same power it used to keep inflation low. So it's not only likely that this inflation cycle is stickier, that it's also likely that future levels of inflation are more persistent than we've seen historically.
You guys were talking about the supply issue in terms of workers coming back into the workforce. How can we understand the fact that the participation rate has not creeped up, that it is still actually going lower on a month-to-month basis if you look at the latest read? Why?
We all talk about economics, but we forget that there's a huge psychological factor undergirding this entire labor market. This was not just a supply shock. This was a people shock. And people over the last 2 years are making different decisions. They're giving up that second job. They're deciding to live on one income. They're switching industries, and we've seen that in the quits rate. So in combination, all these different decisions at the household level means that the workforce has become smaller. And so how do you get the workforce back up? Well, that you might have to reskill workers for different jobs that make it worth it to get off the sidelines.
So what does that mean in terms of inflation and how quickly it can really come down? We were talking about how, at least on the product side, we are seeing some reasons to be optimistic about disinflationary forces, but not so much on the other sides based on what you're talking about. When do we get back to 2%?
Well, productivity is the fly in the ointment of the labor market. We need more productivity, and we haven't seen it. It's productivity that grows you out of this inflation stasis, right? It's when more workers are more productive, creating more output. Right now, we have more workers, but the same output or producing less output. And that's not the way you grow out of inflation. That's really the issue behind the labor market.
I did a tweet Friday out to Chad Jones, the giant out at Stanford, on productivity. And let me ask you, because you're weaned in this. I mean, it's what you've done for years, Neela, and that is, how do you measure productivity of the new economy of work from home? I get that from a big corporation like ADP, work from home is maybe countable. But other than that, are we flying blind in this vaunted productivity analysis?
You've made a really interesting and really important point, because over the last 2 years, the economy has become even more digitized. And so the standard measures of productivity may not hold. And maybe there's some good news on this side, that we're actually more productive than we think. We're just not counting it right. But if that's the case, we should see that show up in GDP growth. right? And we haven't.
That's like Bloomberg surveillance. We know we're more productive than,
We are.
I mean, you look at our
Than everyone else.
productivity analysis.
And they don't give us credit for it.
We're
Is that
just,
where you're going?
we're just the hyper. That's why I asked Neela the question.
Neela, I need to talk about policy then. Policy going forward from here. Are we at restrictive, and how restrictive are we, and how the hell do we know?
Great question. We're restrictive in pockets. You can definitely see. Let's just put it this way. Where supply has been chronically short, like in housing, the policy works. But the policy only works because there's not that many houses to begin with, and prices were skyrocketing already. If there was a greater supply of housing, even a 7% mortgage rate wouldn't keep the tailwind of demographics at bay. But it's because that housing is chronically undersupplied that the rate is actually is having an effect. So where you have supply shortages and a higher borrowing cost, you're seeing an effect. It's not happening in the labor market, though.
And now, unfair question for Monday. You don't have to answer this if you want, but all of Global Wall Street watching us, listening on radio as well, want your update on the new ADP report. You know the pinata this has been, back to Dr. Zandi and all. What's the knowledge base you have about the quality of your new improved ADP report?
It's a different approach. We start with over 25 million workers, and we do something that is a pivot. Instead of forecasting the Friday number on a Wednesday, we provide an independent measure based on ADP client base. And this is the future of data.
Love it.
This is the
How
future
much
of data.
timeline do you need? How much statistical end do you need where you can say this has veracity?
I think we're in that moment now.
Really? We're there already?
We have a very expansive labor market. ADP pays 1 in 6 of U.S. workers in the United States.
I didn't want to turn this into a commercial, but
I'm not trying to, but you asked.
You asked. You teed it up.
And so, this
you
is
want to sell terminals on the side?
This is where I'll broaden it, because the corporate sector is delivering with high frequency data. We don't just get a read every month. We don't just get it once a month. We get it every day. And I think ADP is not alone with other companies that are getting reads on inflation, on productivity. And so when it comes to the future of data, it's not just going to be with government statistics.
So
it's going to be with the government as well, corporate sector as well.
I could sense the frustration. Does it frustrate you that if Wednesday doesn't forecast Friday, people just think it's useless?
You know, I have lots of frustrations, honestly.
Is that one of them?
When it comes to data. That's not it, because what I can say when I have an independent metric is, look, it's one of many. It's a supplement. Don't say this is a substitute. It's not. It will never be. But it's another read on the economy. And at a time when the economy has become more complex, more affected by rate sensitivity and government debt and fragmentation globally, you need as many credible resources as you can get. And so we offer this to Wall Street. Take a look. Disagree, like it, don't like it, figure out when it works for you, but it is another data point for you to look at.
They should clip this and put it on the website.
Yeah, exactly.
Doing a fabulous job.
Don't worry, we probably will.
Thank you for coming in. Always good to see you. Thanks for sitting here. It's good to see you in person. Neela Richardson there of ADP. TK, the payroll support on Friday, we've barely talked about it. Barely talked about it all morning. Just pushing ahead to CPI, pushing ahead to midterms.
The differential between the two series, the non-farm payroll series, which gets all the media glory, and the establishment series, I thought the differentials there were very nuanced. They always lead to, well, we need more data. But the fact is there's a real disparate view of the American labor economy.
Can I do my promo now?
Please.
We just get ready for it. There we go. In the next hour, Mike Wilson, the CIO and Chief US Equity Strategist at Morgan Stanley, will be joining us around the opening bell, 9:30 Eastern. I practiced that
What
just
did
for
Mike say over the weekend? Seriously.
Mike's basically talking about the potential of a midterm result that drives yields lower and fuels this equity bear market rally just a little bit more. But we also need to build on what we heard from the Fed last week, which I think was game-changing for many people.
Today will be
from the Fed officials.
From the Fed officials.
Do we start to see some division from then? Mike Wilson, 9:30 in the next hour on Bloomberg TV.
You have Alarian on?
We don't.
Okay.
Might have John Henry on Liverpool. He doesn't know that yet, though.
He doesn't know it.
From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Ukraine's President Volodymyr Zelensky wants Iran to be punished for helping Russia. Zelensky said if it wasn't for Iran supplying weapons to Russia, quote, we would be closer to peace now. Both Ukraine and the U.S. say that Russia is using Iranian drones in the war. In Brazil, President-elect Luiz Inácio Lula da Silva will unveil a multi-billion-dollar spending plan to pay for social aid. It will be the first test of his congressional support even before taking power. Lula will need approval from Congress to break a constitutional cap on expenditures. Facebook parent Meta Platforms reportedly will start laying off thousands of workers this week. According to the Wall Street Journal, the job cuts could come as early as Wednesday. Meta had been struggling with growing losses, plus it's been investing heavily in developing its metaverse business. Shares are down about 73% this year. The northeastern U.S. is heading toward a winter heating crisis. Heating oil delivered to New York is the priciest ever. Retailers in Connecticut are rationing it to prevent panic buying, and there's warnings of a natural gas shortage. And it is all up, and northeastern consumers, they face the highest energy bills in decades this winter. In Houston, furniture store mogul Jim McIngvale has won $75 million on his bets that the hometown Astros would win baseball's World Series. Now, that includes a $30 million payout from Caesars Sportsbook that the company calls the largest ever at a legal sports betting site. Now, some of McIngvale's winnings will go back to his customers. Those who bought a mattress for $3,000 or more will get their money back. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts. I'm Lisa Mateo. This is Bloomberg.
If you look at all the polling data, if you all show up and vote, democracy sustained. It's in your hands. And look, you're one of the reasons why, as I said, I've never been more optimistic about the future of this country. I look at America reasserting itself to lead the world in the 21st century.
The President of the United States speaking there as we dash towards a Tuesday election. Again, we will be in Washington Tuesday and Wednesday with an understanding much will be undecided by Wednesday morning. There was one person I wanted to speak to. He is someone with the fabric of the Democratic Party of a good 50 years. He was Philadelphia District Attorney in 1978, and anyone in politics knows that would be the former governor of Pennsylvania, the former chairman of his Democratic Party, Ed Rendell. Ed, I want to know how you would pick up the pieces for the Democrats beginning Wednesday morning. There has been a liberal, a progressive shift. There has been what we've observed over 2 years of a Biden government. Fine. What's the Ed Rendell prescription starting on Wednesday?
Well, I would have started a little Wednesday. But Wednesday, we've got to come to grips with the fact that both wings of our party basically want the same outcome. They just differ about how to get there. And we've got to put those things behind us. We've got to learn the art of compromise among ourselves first, and then go forward. And secondly, we can't be shy. We should take a lesson from the Republicans. If they smack us in the mouth, smack them back. All this Democrats are soft on crime stuff the Republicans have been running. I'd have an ad right all day this weekend, past weekend, and tonight saying the Republicans say that Democrats are weak on crime. They cite an increase in homicides. But all these homicides are increasing because of the availability of guns. Every Democrat voted to ban assault weapons and high-capacity magazines. Every Republican voted against it. So who's soft on crime?
Ed Rendell, I want to speak to a party, some would say, hijacked by fancy people on the East Coast. How do you get back to mainstream Democrats, the people that Connor Lamb found attractive? They found Connor Lamb attractive outside Pittsburgh. There's this arch Senate battle in your Pennsylvania as well. How do the Democrats move away from the perception of East Coast liberals to centrist Pennsylvanians?
Well, we've got to find the right candidate. And for example, I think Congressman Ryan is a great candidate in Ohio. I don't know if he's going to win, but boy, he's giving them fits. Because he's a candidate who people know represents their best interests. if I was running for office now, I'd go around with a big board, every speech I made, and the board would have the 10 issues that are most important to the public. And I'd say, were the Democrats that voted, were the Republicans that voted? And just hit them with the facts. We don't press the facts enough, and we get scared. We shy away from an issue. When someone attacks you, you can't ignore it. You've got to fight back.
Do you think that it was a mistake for Senator Fetterman to do that debate, given that he is still recovering from his stroke?
Well, I'll tell you, by Thursday we're going to know. No, look, he deserves some high marks for courage in doing that debate. It was very difficult to do. The format was terrible. 15 seconds to answer a question about real policy. You can't do that if you're 22 years old and tremendously healthy. So he deserves a lot of credit for courage and for his desire to be transparent. On the other hand, there were some tough images out of that debate, tough images of him not being able to put his thoughts together. And the interesting thing is, I was with him Thursday before the debate. He gave a 15-minute speech without stumbling for 1 second.
But Ed, there's a question, there's a larger issue here, especially as we head into 2024, which is why has the Democratic Party not gotten a bigger bench of people to really become younger and more vocal and get out there rather than just basically stick with people who have worked in the past and who are known but maybe haven't won?
Well, I think, we do have a bench of younger people. The Congress people that got elected in 2018 are still there, are all young. Most of them are moderates. They're good Democrats and they're good candidates. And I think they might just pull this thing out for us.
Ed Rendell, I want to look back to William Scranton. He was one of your arch opponents, the Republicans of Pennsylvania, long ago. How do you perceive, Ed Rendell, the Republican Party after this election? And dare I say, if President Trump doesn't run again, the next GOP, what will they look like?
Well, it depends. If they're smart, they'll moderate a little bit, and they'll stop this election denying. Because in the end, election denying will hurt them. Because the independent voters, the moderate Republican voters, they don't believe the election was stolen. They know the election was. There were 62 court challenges, half of them before judges that Trump appointed, and not one of them won. The election was fine. Yeah. And by the way, if we were fixing the election in 2020, we did a terrible job doing it because we lost seats in the Congress. So, no, we've got to get away from all this stuff.
Ed Rendell, thank you so much. I look forward to speaking to you at the Super Bowl with the Eagles here along January time. He is the former governor of Pennsylvania, always the gentleman from Philadelphia. Lisa, I look at that and, as we go into our election coverage, and I still go back to the heart of Ed Rendell, which was crime. And with all that he did in Philadelphia, I can remember the accolades there from Republicans and Democrats, but also inflation in the paycheck, which global elite Wall Street doesn't talk about.
But what do either party do right now about inflation? Honestly, what can either of them really do to mitigate inflation?
But the emotion
in the short term?
changes the politics.
The emotion changes the politics, and that's the reason why it's going to be interesting to see what this means for the parties going forward, because it's ultimately a popularity contest for who they think is going to have a better say and a better voice moving this forward.
And I'll state this strictly anecdotally. As I went through whole paycheck this weekend, I never saw more items on sale in a grocery store than when I went through this weekend. Prices beginning to adapt. Liz Ann Saunders talked about used cars today.
Although we heard, although this story about the energy bills in the Northeast will offset this. This is the reason why it's such a difficult moment, because it's not just one area or another. Okay, perhaps goods are coming down. Perhaps there are areas where food is actually, the inflation rate is mitigating. But on other areas, heating, in other areas, services, in other areas, plane tickets, you're seeing the opposite.
I go back to rent. I think, and we're colored in New York City by that, but I read with Hawaii the most expensive rent of a state in America and the West Coast as well. I just think rent has got to be front and center.
Yeah, and if it does come down, how far does it have to come down before it starts to affect some of the main metrics and, frankly, how people feel?
We'll stagger to November 10th, which I believe is out there somewhere. We'll have a CPI report, and we'll do that with all our good guests as we can. We look forward to speaking to you tomorrow from Washington. David Weston leading our evening coverage election night, and we'll be with you Tuesday morning and, of course, that important Wednesday morning afterwards as well. Futures up 9. Stay with us. This is Bloomberg. Good morning.